We're focused on those, whether that's the auto sector or the banking sector. Both of those spring to mind initially, Guy.
Yeah, I think it'd be interesting to see what the oil sector does as well. We don't know yet whether or not they're going to be included. Let's talk about the markets. Let's talk about the opening trade. Here we go. Here's the numbers for you. FTSE 100 up by 0.2%, 1/10 of 1%. I maybe should be rounding up. There we go, 0.2%. That's where we are at the moment. We'll see what the 600 does in just a second. We'll see how some of the single stock stories work their way through the market as well. Novartis is going to be an interesting story. We'll see how the SMI opens on the back of that story there as well. The IBEX is up by 0.2%. The CAC 40, lots to factor into the CAC this morning. We've also had inflation data that we need to fold into the story there. Germany up by 0.2%. Germany's opened quite quickly. Tells me there's no news in the German market this morning. We still wait for the Swiss market. Tom, Anna, what are we seeing below the surface?
Yeah, across the sectors, top of the list right now is technology gaining 0.9%. What a massive week, as we've been discussing, for the tech sector, given everything that's come out. In terms of DeepSeek, the earnings coming through. Most recently, of course, for Apple. So Apple could be part of the factor that's leading to that sector on the upside. Their guidance for the current quarter better than the estimates. Healthcare also up by 0.8%. Energy gaining, stronger oil. That ties back to the tariff risk question, of course, as well. Energy as a sector up 0.4%. On the downside, real estate off by 0.3%. Telecoms also lower by around 0.3%.
Yes, Novartis, as you mentioned, the healthcare sector is doing well, and Novartis is one of the drivers of that. So the sector as a whole up by 0.9%, Novartis up by 2.2% after they put out this new guidance to the market. They're facing a number of patent expiries for 3 of their key drugs, but they have also come out with some new guidance that demonstrates some positivity despite those copycats. Absolutely.
It's been a big week, and it's been really interesting to see how the drug companies feel about what is happening in the United States. There's a pricing story. There's also a kind of RFK story that I don't think we still yet fully understand, and the implications of that for the healthcare sector, I think, is still being kind of distilled.
Yes. For reasons that are fully easy to understand. When we were asking various executives in the healthcare space about this yesterday, they were saying, well, we worked well with the last Trump administration, we'll work well with the current Trump administration. So it's not something that the CEOs of these healthcare companies seem to want to get involved with.
Except the person at the top, if he gets through that confirmation process, has obviously very different views, specifically on vaccines, and he was grilled about that, wasn't he? So again, in terms of some of the individual movers that we're seeing across Europe as we kind of factor in what is filtering through, it is, again, technology as a sector. Healthcare is there. Novartis currently up 2%. I'm just looking at the Balfour Beta, interestingly, here in the UK, up 1.6%. You've got Hexagon gaining 6.8%. On the downside, some of the losses coming through from the retailers here. Sainsbury's is currently down a little under 2%.
Next is up 2%,
one of the movers. Next is gaining. Is that an earnings story, or is that an upgrade? An upgrade, okay.
An upgrade, apparently, according to our team. Thank you very much for that information. Joining us now, let's talk about where we are on these markets. Michael Falcon, CIO at Tidan Capital. Michael, good morning to you.
Good morning.
So it's been a really busy week. It's a slightly quieter day. And in terms of the evidence of impact of the tariff story, we were looking for that in the auto space, looking for that in the banking sector. It's not jumping out this morning. So do we feel that, well, does the market not think that actually the tariffs are coming, or does the market think it's priced in tariffs on Canada and Mexico, and the read across into Europe isn't enormous? So,
well, yesterday it wasn't, and then in the evening it was, and today I don't know what it is. So it's very hard to price anything in, and then it's going to be up and down. In terms of the auto sector, it's been sucking wind for a long time. You saw GM, Ford didn't look great. The Europeans, they're in a tough spot. The Chinese are coming after them. So there's a lot of things that are negative anyway. So tariffs on top of that. not a great story.
Yes, but one story that I know has struck you as quite convincing is through the earnings season, we've seen a lot of positive storytelling by executives that you think is sticking in the United States in a way that maybe it doesn't usually.
No.
Is that like animal spirits are back? Are we back to Gordon?
100%. People love making money, and money you make when things go up. So you buy every story, and it's the same thing here. You know, market is pretty much euphoric apart from Monday. But Monday, despite the S&P being down 1.5, you know, equal weight, it was still up, which tells you a lot. You know, a lot of companies are going up, and you want to buy the hope story. So, again, you know, the other day you had Burberry reporting. I think the number stinks, but
they're not as bad as expected.
Yes,
so.
Exactly, it's not as bad as expected. It's only down mid-single digits on full price items because they sold a bunch of scarves during gifting season. Numbers again in March will probably be down high single digits. That's not a great story.
Burberry scarves are really expensive, though.
Yes, yeah, and they don't go on discount.
He's checked.
Guy spends a lot of time in Bond Street, so he's got his finger on the pulse of all this stuff.
So he's my gauge here.
Yeah, he's going to be handing out the gifts later. What do you think of it? So the breadth story, you've highlighted that for us. The fact that S&P equal weight has actually held up pretty well this week.
Yeah.
Do you fund a move into that breadth by selling Mag 7?
Well, I got to say the monopolies or the pseudo monopolies, as the Mag 7s are, is quite safe place to hide.
Still?
Yeah. Well, I'm not a great believer that this is all over and growth is going to be fantastic. Inflation is under control. You know, rates are under control. Now we're all playing for Goldilocks and we're going for all these value plays. I'm not a buyer of that.
Okay, and that is a question mark over the health of the US economy. That is expectations that maybe the Fed doesn't go as far as some would think, that 50 basis points is not what to expect from the Federal Reserve. And what is feeding into that slightly more negative view? Yeah,
obviously the US economy is much better than Europe. Europe is a basket case in a lot of places. But the US, obviously they have growth in front of them, but you have a lot of new things coming along that you don't know where it's going to end up. So suddenly you have tariffs, then you don't have tariffs. You want lower rates by Trump, but then you have Powell. You have a lot of different counter initiatives that it's very hard to say where we're leaning towards in terms of growth for the full year.
Other scarves are available. I should just point that out. Europe, I'm looking at the Stock 600 every day this week. I think it's gapped higher every day this week. Continues to move higher. It's had a really strong week. We're up by circa 2% this week. I feel like I've seen this movie before.
I agree. Yeah, we're here again.
We're here again, beginning of the year. European stocks going up. Let's go. Yeah. This year's going to be different. Is this year going to be different?
I seriously doubt it. But looking at it, I guess over a longer period, you know, the last 10 years, average returns on Euro Stoxx 600 and Euro Stoxx 50, DAX, we're already there 30 days into the month and the year. That's fantastic. I think that was it.
So this is as good as it gets?
Yeah, it doesn't get much better.
Okay, if I want to diversify, though, and I want to think about where I diversify. You talked about the equal weight earlier on. The equal weight had a good Monday, so people do want to diversify.
Yes.
Isn't it cheaper to diversify into Europe rather than the equal weight?
Sure, but you're starting at a P now, forward P 15, 16, depending on what index you're looking at. That's not cheap on a historical basis, so you have to bake in some earnings growth. Last year, if you look at earnings, it was flat. Started the year with great hopes of maybe double-digit earnings for Europe. Again, this year we start with a similar type of hope, but it always comes out as a damp squid.
What kind of regulatory changes are you expecting we'll see for Europe then, Michael? Because I ask this because one of the things that did okay for Europe last year was around decarbonisation, electrification, and it felt like that was the North Star for some investors. Through all of the other macro volatility, there was this structural change that they could bet on and put money behind. Does that look a little shakier now?
Yeah, I was going to say, what deregulation did we get in Europe? I haven't seen any.
No, but to come, I mean. Yeah,
exactly. No, obviously, Europe is great at regulating. You know, that's the one very, very moot point is that, you know, it's the best in the world at regulating when you should probably look at deregulating. And it's really hampering business innovation and business growth. So until I see it actually being implemented, it's hard to be extremely hopeful.
Would you expect it to come, though, on that environmental agenda? Or would it come
possibly.
In other places?
No,
tech, for example.
obviously, environmental agenda is very, very warm at heart in Europe versus a lot of other different countries. But it's hard to see things moving fast in Europe. And funny enough, Monday, Europe outperformed because of lack of innovation.
Yeah.
Yeah. Is that great? I don't know.
Well, when you're in London, you're used to saying, well, the FTSE's outperforming today because it has lots of oil companies and banks and things like that.
Do you want to, on AI, do you want to be buying or investing in companies that are going to benefit from a depreciation in AI pricing? So the buyers of AI products, how they integrate. Is that, do you want to be buying versus the hyperscalers, given what we've seen this week?
Well, it's kind of tough to know who will be the beneficiary. The consumer will be. That's the obvious one. So can I buy the consumer? That's kind of tough, unless you think they're going to have more money to spend because they have to spend less on AI or applications that are going to be developed with AI. But today it's very hard to say who will be the winner from utilizing AI. Obviously, big corporates will have a cost benefit, so trying to find pockets where you can streamline corporate expenses, yeah, that's a possibility. But it's so hard today to know exactly how this will pan out, and we're trying to find ideas and opportunities. It's almost easier to see who's going to lose than who's going to win. And just going back, I think it's a great analogy looking what happened during the internet and the dot-com boom. You know, at that time, we had all these companies, you know, spending gazillions of money on things we didn't know how it's going to pan out. And when you look at these companies, Nortel, Lucent, you know, they're all busts.
Is this,
this is huge.
Okay. Is this 1999?
It feels like it. You know, it's of course impossible to see in the future, but it feels very much the same stories playing out again.
And an order of magnitude decline on the back of it, similar to what we saw then?
Well, it depends where valuations end up. You know, some of these, you know, if you look at the headline valuation on NVIDIA, it looks pretty good, you know, in terms of where the growth can be. But what happens the 2 years forward?
You're talking positively about the US, but then the things you're talking about there suggest some kind of overheating situation.
Well, it's a valuation thing, really.
Right, so it's just limited to stock valuations then. You don't think the US economy is in risk of overheating given the
that is a tough call now, because it depends on how hard will it be on tariffs. You know, how much of domestication do you want to do? You know, what's the reshoring going to be? There's so many different aspects of it, and how quickly will it be done? If it's done in a gradual manner, it can be potentially controlled, but if it's all coming at one time, that's going to be much harder to handle.
So if it's not gradual, and if you do get that kind of big bang on tariffs, where's the safe haven of choice?
Then I think we're going to see inflation. We're going to see rates going up. So I think we see a sell-off in equities. Yeah,
it's okay. So do equities protect me from inflation? Does the bond market protect me from equities if equities have a problem with inflation?
Well, this story has been kind of correlated.
Where do I go?
Well, cash is kind of good.
At the same time, cash.
Yeah, or being short.
Being short, like a lot of people are getting out of being short right now.
Oh, I know. They're getting carried out. You know, I am getting carried out all my shorts, but that's part of the game. You know, you got to have a balanced book and try to be just nimble and move around.
Wait, which shorts have burnt you the most?
Oh, yesterday, about 90% of all companies
were
up.
I thought we were going to go further back. Okay, just yesterday. Oh.
Yeah, no, it's a lot of these hope stories. You know, so companies with obvious problems where you know that in 1 year, 2 year, 3 year time, it will be much worse off. They're getting all this great CEO speak of how rosy things will be and how we're going to turn this around. You know, there's plenty of it. Like Burberry, for example, it's up nearly 100% in a few months.
And you're short Burberry?
Yes.
There was a massive move before, and then it's popped quite considerably off the bottom.
I loved it going way down.
Yeah, I'm sure, by the sounds of things, if you were short then. Okay, so how do I protect myself? Being short's hard because the market can be kind of irrational, you would argue, for longer than
tells hope stories.
Precisely, the hope stories are there. So how do I protect myself? Where is the protection in the market that you can buy? If it's not the bond market, you can't be short. Equity markets on the... just walk me through what the diversification trade looks like other than cash. Is there one?
Well, just in general, in terms of asset allocation, then you need to be involved in pretty much everything. So a little bit of equities, because you don't know how much more is it going up. You know, a bubble takes a long time to break.
There was a story yesterday which I read, I can't remember where I read it, talking about the guys that were in the Big Short book, and they'd come together and they were sitting on a panel, and they were basically saying, we can't be short because it's they kind of keep getting carried out, to your point, on the short. So therefore, what we're looking for is cheap assets that are unloved by the market.
Yeah.
Is that the trade right now?
Well, to me, what I want to own is single name stories where they have delivered the balance sheet. You know, management that are responsible, taking care of the balance sheet, come from a tough period, turn around the business, where it's proof they turned it around. Those tend to perform very well over the next several years. So there you can have a few hiccups on the way, but
names?
Well, I like Grifols. It was a great short case in the beginning of last year.
Which pretty was here, yeah.
Yeah, exactly. Yeah. And now I think they sorted out most of the problems. They're reporting end of Feb. I think they're going to surprise on the upside, and there's some pretty good opportunities.
Is there a balance sheet crisis coming then? If the Fed holds, I mean, there's an expectation they hold for longer. What, is there a potential, amid small caps, medium caps, is there a balance sheet crisis that we're not waking up to?
Well, there's obviously a big wall of debt maturities coming up, and the high yield market has dealt with some of it, but the convert market, particularly in the US, is massive, and they have a huge amount of maturities coming up in 25, 26, and 27. So there's going to be a lot of refinancing happening there. I think there's a lot of opportunities to exploit there.
Great to see you, Michael. Thanks for stopping by to see us.
Yeah, thanks a lot.
Michael Falcon, CIO of Titan Capital. Okay, let's take a look at where the core of the European story lies at the moment. The core six looks like this. As you can see, ASML rising nicely, up by 2.41%. The tech sector broadly getting a boost. You can see that in Schneider. Safety trade, Nestle's kind of not going anywhere in a hurry. Looks like actually pharma is bid this morning. We bring up Novartis as well, but Novo is also rising. LVMH, kind of just drifting sideways, down by 0.2%. What else are we watching this morning? Let's figure it out. Joe Easton, over to you.
We are seeing some decent moves higher in those chip stocks this morning, Guy, particularly given the news that we got out of the US from last night on Intel and Apple. That does seem to be the positive boost for these stocks this morning. ASML leading some of the gains. We've also got ST Micro rising as well. The news out of Asia, of course, was more mixed, with Samsung declining and then SK Hynix catching up from the slump earlier in the week. But it's really the US reports getting the attention in terms of that move there. Then in terms of Novartis, that one was edging higher over in Switzerland. Double-digit sales growth potentially coming for the company despite an impending wall of generic drugs that are coming onto the market, potentially going to hurt their market for the heart drugs is their main thing. There's some concern there on that one, but the sales growth boosting that one. Now, Orsted was actually a little bit higher on news of a new CEO, or at least a change in the CEO, the current CEO stepping down. The stock actually now trimming that and actually turning negative. Remember, they've had a lot of write-downs in the US and a lot of concern around Trump's policies over there on the renewable energy side as well. In terms of a stock moving a lot in London, Smiths Group. Now, this is the company that makes all the scanners that you scan through when you go through airports, checking all your security. Now, they are announcing they're going to spin off their detection business, according to the latest update from them. There was some activist pressure on that very recently, talking about potentially separating that business, and that does look like what they're suggesting they will do now in terms of Smiths Group. A big gain for that one. Then finally on the ratings changes, next is a safe haven in UK retail, according to UBS, which upgrades it to buy, as you guys were mentioning just a few moments ago. They like that stock. We're seeing a bit of a boost for that one. It was the best performer on the FTSE 100, up 1.7%. And Carrefour over in France going the other way. A lot of uncertainty around the French market and also Brazil, and that is the reason why HSBC downgrades it to hold. No longer recommends buying. Carrefour slipping in Paris this morning.
Joe, thank you. Joe Easton with an update on those movers. Coming up on the programme at the end of what has been a really big week for tech. We've had the earnings story, we've had the AI race, of course. We'll look at Europe's role in that AI race. Stay with us for that conversation. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I think as we see more and more adoption of AI, there's going to be more and more demand for compute power. It will happen in data centers. The form of it may change a bit, but we still think it's essential, as is the energy and power, which we think will continue to be needed. So we're going to continue to operate in a very disciplined way. We're going to build when we have demand from our tenants.
Blackstone's COO, John Gray, speaking to Shonali Basak there, talking about the continued need and expectation around data centers, the infrastructure of AI and technology and chip makers in Europe performing quite well in the session, this Friday session so far. ASML is up 2.6%, of course, providing some of that high-tech kit into the foundries. ASM, also based in the Netherlands, currently up 2.7%. And ST Micro, which came out with its results earlier this week, gaining 2.5%. So some upside coming through from the semiconductor makers that, of course, have been whipsawed by the news out of DeepSeek through this week. Now, after profit, of course, as Samsung, the pivotal chip division came in lower than expected. That's for Samsung. Let's get more details from Matt Bloxham from Bloomberg Intelligence. And Matt, this is still a story of catch-up then for Samsung.
Yeah, it is. And I guess one of the big pieces of news was that we're increasing their R&D investment, maintaining it at a high level to try to close this gap on their big rival, SK Hynix. And the kind of big focus is high bandwidth memory, which is what's needed to power the NVIDIA chips. And SK Hynix has had an approval for quite some time about a specific type of chip that you need to support the China-oriented technology that NVIDIA sells. And it's taken a long time for Samsung to kind of get this approval from NVIDIA too. They've got that now, but obviously things don't stand still, and there's a next generation of high bandwidth memory chips coming along, and it looks like SK Hynix has still got the edge on that. But there's going to be a big tussle between the two of them about who can get the nod from NVIDIA first, because that will kind of create a bit of a first move advantage. So I think that's the main reason that they're stepping up their R&D to see if they can kind of leapfrog SK Hynix.
This time last year, Intel was trading in the 40s. It's now trading at 20. Mm-hmm. Were the numbers that we've just seen a sign of stabilization?
I don't think so. What we saw, we obviously better than expected results in the quarter they've just done, but there's expected to be a corresponding dip in the quarter coming, because essentially clients were increasing their inventories ahead of the fear that sanctions or tariffs might impact them going forward. So, it's not really a sign of things getting better. It's just a kind of timing issue. And obviously, there's still a huge amount of issues for that company to work through in terms of getting a new CEO, whether this company stays together, whether they can make their foundry business work. And, the only client they've got for their foundry business is themselves at the moment. And I think probably what investors are holding on to is if the kind of America First initiative really really gains traction, that more companies will have to build this stuff in the US.
Right.
And that's where Intel's strength will maybe start to come into play.
Matt, let's recap the latest on DeepSeek, because this has been really whipsawing markets, or certainly did on Monday, Tuesday. We now have news of a US investigation into DeepSeek, which seems to be around the types of chips that are actually being used here. Previously, we'd also heard suspicions stateside that maybe DeepSeek relies on OpenAI and other Western large language models. So what threads of investigation and probing of DeepSeek are currently underway?
Yeah, so I think, as far as we know, they're the main ones, that you have this kind of Microsoft OpenAI-led probe about whether they stole trade secrets to kind of help develop the DeepSeek model. And now we've got this investigation about whether it was using advanced chips that it shouldn't have been able to get access to because there's sanctions on China. Now, DeepSeek have said that they use the H800 chips, which is the China-approved NVIDIA chip. But there's been a lot of speculation for some time that China's getting access to the most advanced chips. And Singapore, which is the focus of the story, accounts for about 20% of NVIDIA's sales, which seems kind of very outsized. I think there's been a lot of speculation for a while that who are the end clients for these kind of Singapore shipments, and how is this a kind of backdoor into the China market? And there have been stories about data centers being built in third countries, and once they're finished, just being dismantled and shipped into China. So, no sanctions regime is kind of flawless. We know that, and I think this is the way that China's trying to evade those. So I think we talked about this earlier, but one of the question marks for me would be with NVIDIA is, are they squeaky clean on this? Did they do everything that they could to understand their customers? And we saw a few years ago that Ericsson got into all sorts of trouble about bribery and corruption in places like Iraq, and they're still paying the price for that, still under investigation. They had to pay a lot of fines. So I think there might be a little bit of scrutiny on NVIDIA to see whether they acted appropriately at every stage.
Would increased restrictions on things like the H20 chip that the Trump administration is potentially considering, would that actually have a material impact on China? And what alternatives could they look for in China?
It kind of feels like now maybe the kind of the barn door is open. China's great at understanding, well, historically has been really good at understanding Western technology and copying it. And if they do have access to the most advanced chips, and we've seen with DeepSeek whether they built it from scratch themselves or they copied other people's models, they can do it really well and come up with something even better. And we've seen that in the mobile equipment market too, with the 5G infrastructure. So I think they understand what they're doing now. Probably they have enough information that they can kind of go forward themselves. Probably the bigger issue for them is whether they have the kind of the fab plants to make their own silicon, and that might be still an area where they might have a bit of a time gap to kind of catch up.
Some of those.
Yeah, exactly.
Which leads us to geopolitics. Okay.
Yes, takes us into other territory.
Matt, great stuff. Thank you very much indeed. Technology leading European equity markets this morning, up by 1.34%. Up next, we're going to talk about what is happening in Germany. Big vote today in the Bundestag. That's next. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. Number one is the people that have poured into our country so horribly and so much. Number two are the drugs, fentanyl, and everything else that have come into the country. And number three are the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
President Trump reiterating his plans to impose tariffs on goods from Canada and Mexico coming in tomorrow. The Canadian dollar, the Mexican peso, both taking a hit ahead of that deadline. Kevin Whitelaw, Bloomberg's Brussels bureau chief, joining us now to discuss all of this. Kevin, that's the broad brush. We're going to get tariffs. That seems to be now the base case. The question is, what are they on? What are the details? Is it going to include oil, particularly from Canada? What is the legislation, the emergency potential legislation that they're going to use to back this up? How stable is that? Are there details that are still going to be critical to the impact that these tariffs are going to have?
I mean, absolutely. Trump has given himself a deadline of tomorrow to make this announcement and to unveil these tariffs on Canada and Mexico. We still really don't have any clue what this means. He's talked about them as if they're going to be broad brush, but he has also suggested he hasn't decided whether they'll include oil, which in the case of Canada would be a very significant element. So, ultimately, we're just going to have to wait, like we've been doing all along, to see what he ends up doing. He's got sort of two warring ideas in his head on these tariffs, and one is he wants to use it as a negotiating tactic, which is to say what kinds of concessions can he get on the drug war and immigration from these countries. But another is to still sort of fundamentally reshape the way American manufacturing works and try to deter companies from basing factories in Mexico or in Canada. He wants them in the U.S. Those aims are not exactly the same. They're a little contradictory even at times. And so he's going to I think everyone is still trying to figure out which is the real aim here and what's he really trying to accomplish.
Yes, indeed, because then you might have an idea of how Canada and Mexico can implement policies, make changes that might push back these tariffs or reduce these tariffs. So the president was talking about fentanyl, he was talking about migration, and both of those countries say they've done things on those fronts. But then, of course, even if they do tackle those, you come back to the trade deficits, and that's something that Trump has clearly prioritized. So you kind of wonder if there's anything that these countries can do to stop these tariffs being imposed.
Well, that's exactly right. And obviously, we do know Trump is sees himself as a negotiator and someone who wants to make deals. But some of these aims aren't really about deals. Some of the things he's trying to accomplish are a lot more structural and a lot more medium term. So, you know, as much as countries are going to be tempted to try to make deals with him, you know, there's also the risk they make a deal and then he keeps pressing because, you know, if he senses weakness, he may just keep going. And so I do think that both Canada and Mexico are going to have some complicated decisions ahead of them as to whether they, you know, do try to see if they can find ways to appease him or whether they want to hit back hard and really inflict pain and get into a more punishing trade war that has the risk of economic damage on both sides.
Yeah, I mean, arguably they made concessions last time round, didn't they, with the rewiring of NAFTA, and now they're facing his wrath again. What should we expect around China and the threat? How real is the threat of tariffs from China? Or is he's been talking a little bit more softly about tariffs on China versus Mexico and Canada?
Yeah, and I think that has a lot of people thinking that the Canada-Mexico ones are maybe a little bit more about a negotiating tactic, the sort of the way he did with Colombia, where he sort of threatened a high number and then, you know, sort of quickly cut a deal of sorts. I do think with China, you know, he has been. China's been a problem as far as he's concerned for a long time when it comes to trade. I do think that he is serious when he intends to try to do something. But like everything, I don't think his administration has really decided how hard, what kind of timing, and how to approach it yet. And so, you know, you can sort of see the Chinese just sort of waiting. It's the same thing here in Europe. Everyone in Europe is just kind of waiting to see where they're going to go. You're seeing a lot of people on both sides try to make the case about what the value of the current trade is and what the risk is if they go into something that's a real tit-for-tat kind of confrontation.
Kevin, you talk to a lot of people in Brussels. What is the expected response? What's the current thinking? What are people telling you right now about what Europe will do if it gets hit?
Well, if it gets hit, I mean, they have prepared a list of retaliatory steps, and it can sort of be scaled up or down based on, you know, what it is that Trump actually does. So we don't have the details of that list yet, but we do know that the basic idea would be to, you know, inflict some real economic and perhaps market pain. You know, the idea is if Trump measures some of his own success by the value of the stock market, what do you do to hit the stock market? So, you know, we'll have to see in the end whether that ends up ever happening. Obviously, Europe hopes it doesn't. They're trying to avoid it. And right now, all they're trying to do is not say anything that may provoke him.
Right. And we know from Canada's perspective, they've already said that they will retaliate against coffee and bourbon. And I know we've seen lists in Europe, Kevin, that try to push at sort of parts of American culture, I suppose, as well as having an impact economically, or maybe even not having so much impact economically, but having a lot of name recognition.
Yeah, there's a little bit of symbolic. That's, you know, when during Trump's first term and the US and the EU got into a tariff fight, the EU hit bourbon and it hit Harley Davidson. It hit those kind of targets. It really did a lot of damage, particularly to Harley Davidson. So, you know, there is some interest on his part in hitting some of, in the EU's part in hitting some of the symbolic targets. But I do think this time, as they prepare these lists, they're actually focused a bit more on how do they actually inflict some economic pain so that hopefully, you know, Trump thinks twice and steps back from a full confrontation. But as I say, we really don't have the details this time because the EU doesn't want to look like it's courting or this fight. It doesn't want this fight. And instead, it's trying to remind the president that you can't just measure trade when it comes to the actual physical goods crossing the ocean, but also look at digital services where the U.S. has quite a surplus with the EU.
Okay, excellent context on the tariff threat. Kevin Whitelaw, thank you very much. Indeed, to Germany now, where the German parliament is set to vote on a hardline immigration bill, which has caused a stir, not just because of its tougher stance, but because Friedrich Merz, the favourite to become the next German Chancellor, is relying on support from the far right to get it through. He's faced a fierce backlash, including accusations that he's breached a firewall aimed at keeping the far-right AfD from power. Bloomberg's Oliver Crook joins us from Berlin. Ollie, explain this controversy.
Yeah, so listen, Tom, I think we should start by beginning to say that this is basically, I think, the most consequential event so far in this campaign, in this election, German election, and that could really, really change things dramatically going into this vote that is going to be held in about 1 hour's time in the Bundestag to basically put forward by the CDU in order to have a much sort of harder line on immigration. The reason, as you mentioned there, Tom, that it is significant is not necessarily because of the content of the law. It is because it would be for the very first time since the Second World War that you have a mainstream party, you have the CDU voting in the same direction together with the AfD. If you look at the actual content of the law, and that's what's actually sort of interesting about this, in a moment where you have immigration as one of the top priorities in Germany, top priority across Europe, top priority in the United States, it's not really a radical law. It's calling for sort of permanent border checks on some of the German border, accelerated deportations for illegal immigrants, as well as sort of heightened security measures, and to empower a number of security forces in order to execute those aims. But of course, in the context of Germany, you know, there's a cordon sanitaire in France, and there are these policies across all of Europe. But for Germany, it's obviously very, very different, and it strikes very, very close to home for a number of people in Germany, because that is, of course, how the sort of rise of fascism began in Germany, with little concessions on the way forward until a full takeover of the government, which is why you have seen thousands of people take to the streets in a number of cities over the last couple of days.
Merz knows that this is unlikely to go through. As Anna was pointing out earlier, the Bundesrat's likely to vote it down, the upper house. What's the objective for him here? What is he trying to achieve? What message is he trying to deliver about his policies going forward?
And so listen, this is really what's very interesting about whether or not this is something that's going to pay off for Friedrich Merz. I think everyone has a different opinion on this, and if I'm honest with you, I have no idea how this is going to play. I will be very interested to see what the polls will show on Monday. I mean, he has said it himself in his own words. He was talking about this yesterday, that he wants to ensure that the policies that the CDU have are corrected to such an extent that a party like the Alternative for Deutschland is no longer needed in the country. That is what he's explicitly trying to do. He's trying to tack to the right in order to undermine the support for the AfD. The problem, of course, with that is that it could also massively backfire. Though there may be some support for him to doing this, this could also make him lose a number of the centrists that there are in the CDU. And there has been massive pushback, not just from other parties in the politics, which you would expect from. You have Angela Merkel, who has come out, who has said that this is a bad idea. You have two of the major churches within Germany who have come out against this. This is the Christian Democratic Union. This is obviously sort of substantial. So this could really go in either direction, I think, going into this weekend. And it also doesn't help that the SPD and the Greens basically were unwilling to negotiate or get behind this legislation. And I want to pull that poll that we're looking at right now. This is a poll from 2 days ago, where you're seeing for basically the first time a 6-point spread for the #1 spot in Germany between the CDU and the AfD. I think it's a very, very long shot for the AfD to take over and be the first party in Germany. That being said, ahead of the election in 2021, the SPD closed about a 12-point gap with the CDU. And I think going into this weekend with this sort of bomb going off in the middle of sort of German politics, the outcome will be very interesting to see. I really don't know which way it's going to shake out, honestly.
Well, we'll certainly watch that 6 percentage point spread then, Ollie, between the CDU and the AfD, and we'll see if that moves into next week. Let's talk about the economic backdrop to all of this, because we know about the weakness in the German economic story right now, and we've actually got some weaker inflation data out of France a moment ago, half an hour ago or so, that actually weighed on pushed up our expectations of how many cuts we're going to get from the ECB. What are we expecting to get from Germany?
Yeah, you're expecting to get kind of the opposite story from Germany. So if the French figure came in at 1.8%, what we're expecting in Germany for the month of January in terms of headline inflation is 2.8%, right? And that is the same figure that we had from last month, and that is an increase from what we had in the month before that. So what we're seeing is slightly this trend going up in terms of inflation. If you look at the forecast of what we're seeing from the Bundesbank, what they're expecting inflation to come down in Germany through the rest of this year. They're expecting it to average 2.4%, and then in the year 2026 going down to basically 2%, 2.1% to the ECB target. But let's not lose sight of the fact of the main sort of data point that we got this week out of the German economy, which was GDP for the fourth quarter. It was already expected to contract by 0.1%. It came in even worse, came in at 0.2%, another contraction for Germany. That means another year of contraction for Germany. And it's all coming, Anna, now when we're talking about not just the sort of bad numbers on the paper, we're talking about job cuts across German industry. We had IFO coming out yesterday saying that basically in a survey they just did, that every single branch of industry in Germany is looking to reduce headcount. If you go sort of add that economic picture with potentially what could be a very fractious political situation, a coalition that maybe, once again, can't get a lot done, it's a pretty grim reading for the German economy.
It's going to be fascinating to watch, as you say, the impact unknown at this point. Ollie Crook, thank you very much indeed for talking us through the politics and the economics of what we're about to watch happen in Germany. Coming up, how much should bank bonuses be really worth? And is there a big difference between US and European banks? It's the subject of today's Big Take. We're going to discuss it next. You want to pay attention to this one. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the opening trade. Happy Friday. We are 46 minutes into today's session. European stocks currently up on the SOX 600 by 0.3%, building on the record highs of yesterday. Here in the UK, the FTSE 100 trading at 8,676, up 29 points. Decent gains over in France as well, with the CAC run up 0.4%. Tech and healthcare amongst the sectors leading the gains in the session today.
Okay, so that's today's session. Let's get back to the private equity agenda. The EPEM conference is winding down in Cannes. Deal makers got back on their feet in 2024 and are now waiting to see how a second Donald Trump presidency will impact investments. Erasio's co-CEO, that's William Kadouch-Chassaing, thinks the coming period will have opportunities for the continent. Bloomberg's Kriti Gupta spoke to him at the conference about what Europe needs to do to attract more capital.
Number one, Europe needs to have a shock of investment. I mean, there is a lack of, and there has been a lack of investment in venture and growth equity for years relative to the US, and it translates into the productivity gap that is a lot talked about. The second point that we need to tackle is we need to move forward in integrating our capital markets and move forward in creating pension funds that would help channel the savings in Europe towards the real economy. And the third is also well known. It's about simplification. We are over-regulated, so maybe not regulated enough, but it's clear that we are over-regulated. I'd like to add another point, which is a mindset. We need to change our mindset. We need to be a bit more optimistic about our future and leap forward, because there are great entrepreneurs to back on this continent.
Quite a laundry list there. I'll add maybe one more that I think a lot of people are talking about, which is perhaps the instability from the core of Europe at the moment, from France, from Germany. Is that perhaps sending the wrong message to international investors who, to your point, are maybe looking at the States and saying that deregulation agenda is coming way faster than in Europe?
Interesting you say that, because on the one hand, it's true, there is some instability on in key countries, France, Germany, you named it. And that, of course, is a limitation to setting an ambitious agenda of reform of Europe, to the point I made earlier. But when you talk to international investors, yesterday I was with a Japanese investor, for example, they said, we are starting to reallocate a bit away from the US to Europe, and the reason being that somewhat under the current administration, we think America has become a little less reliable and predictable. So, everyone has his own opinion as to what political stability is. The truth is that, of course, the deregulation agenda is moving fast in the US, and it will take long in Europe, also for good reasons. We don't want to unwind all the policies we have, whether this is in diversity or whether this is in climate.
That was the Erasio co-CEO speaking there with Kriti, of course, at the EPEM Private Capital Conference in Cannes, in front of all those yachts, Guy.
In nice weather. Okay. These are important things that take us to our next conversation, yachts to bonuses. It feels like an obvious transition. How much Wall Street bank bonuses, how much are they really worth? It's a big topic, and it's the topic of today's Big Take here at Bloomberg, looking at the divergence between the US and European bank bonuses, and between banks, to be honest. It really depends how your bank stock performs, because that obviously is going to have a big impact back into some of the stock bonuses that are being given at the moment. Jenny Serrain joins us now on set to talk us through this story. This is really good analysis, and there's a really fun little calculator on the story as well, which is kind of great to take a look at. Just walk us through the divergence that you can see. If I'm given $100 as a bonus, the kind of variability that I could potentially see further down the road, depending on how stocks perform.
No, I think that's exactly right. So especially as we're in the midst of bonus season right now for a lot of these bankers and traders, the number that they're often given at this time of year is not exactly the number that they end up walking away with. A lot of these bankers are getting a big portion of their bonuses in restricted stock units. And so once those finally vest over the course of about 3 years on average, we've found that there's a really big divergence between especially U.S. banks and European banks in terms of who exactly kind of walks away with what they were promised and who walks away with a little bit less. So we saw that on average, the U.S. banks, and it's exactly right, mostly based on the fact that their stocks have been so much stronger, especially post-crisis, bankers at those banks were kind of walking away with more than what they were promised in their annual bonus letters. And over at the European banks, on average, a lot of the times they were walking away with less.
Because of the performance of the stock. And there's that divergence then between Europe and the US. So what are European banks doing to kind of mitigate that? Because this is all about retaining talent.
Yeah, no, I think it's a really good point. There's not much other than the kind of ongoing work that all these CEOs and executives are doing to restructure the bank and put it on better footing, appeal more to investors. There's not much they can do. So I think that's like why you hear so much from them about wanting to tell this story to investors, wanting to get this right, because it really is all this big feedback loop where the stock performance really matters. A good banker, a good trader, they usually know the bank stock price within a couple of pennies or a couple of pence. Yeah. So they are obsessed with this, and it really gets back to this is what they're paid in, and this is why this matters so much to them.
Okay, so what does this mean then in terms of the bonus season we're in right now, compensation, statements arriving for people, and how much fun can you have with the bonus calculator on the Bloomberg terminal?
The calculator is really fun. I highly recommend everyone go and give it a try.
This is a very well-read story on the Bloomberg terminal, I should point out, that will surprise nobody.
Yes, yeah, no, it's really fun. You can go in, you can take a look at your bonus, take a look at how it might compare to someone down the street. But I think right now a lot of folks are really expecting bank stocks to take off in the next couple of years. A lot of that's driven by President Donald Trump over in the U.S. They think he's going to usher in this new era of deal making and greatness for banks. And so if you've gotten a big bonus recently, you're probably feeling pretty good. But as we note in the story, fortunes can change very quickly. We might all remember back in 2023, Credit Suisse was planning on giving out some really big stock-based bonuses. One month later, they were no longer in existence. So fortunes can change very quickly on Wall Street, and the story today is really trying to capture that.
Jenny, thank you very much. Bloomberg's Jenny Serrain with the latest on that big take story. Let's get back to some of the stock movers this morning, Guy, in a market that is broadly slightly higher.
Broadly slightly higher. Novartis is not broadly slightly higher. It is up by circa 3%, just a little bit more than that right now. The Swiss company coming out with numbers a little bit earlier on. It does have an issue with generics. It's basically got an issue with copycats coming through, but it basically is saying this morning that it does see profits rising despite all of that. It feels like its pipeline is going to deliver this year, and as a result of which, the company now expects its core operating profit to grow by high single digits to low double-digit percentage gains. Basically, that is going to outpace the sales story. So a really positive story. Also saying that the CEO basically indicating that he thinks that Trump administration health concerns, the issues around it that it could pose to the healthcare sector, slightly overblown. So I think that's an interesting
the concerns around JFK, his views on vaccines. RFK, not JFK. RFK, good point. His views on vaccines and the pharma industry more broadly. Barclays came out with a note on the back of these earnings saying this was really, really solid because the expectation, to your point, had been that they would take a hit from these generics. On the chip sector, you're seeing gains for technology as a sector in Europe again today on a massive week for tech. ASML over the Netherlands up 2%. ASM also in the Netherlands, up around the same amount, 2.4% in fact. SD Micro over in France, gaining just shy of 2% as well. So the lift coming through from the chip makers and the equipment makers that go into the supply chains, you can put down probably to a better than expected picture coming through from Apple.
Yeah, let's go to another stock on the move this morning in London, and this is Next. And this is often seen as a bellwether of UK retail. It's getting an upgrade today from UBS, and this is because they think that this stock and perhaps the sector, maybe even the economy, is at an inflection point. They say they've taken the fashion retailer to buy from neutral, and they say it's an inflection point. But this is not necessarily because of a good consumer story. They say that it acts as a safe haven in an uncertain consumer landscape, and so as a result, giving it an upgrade.
Okay, next on the upside today. Here's what else to be thinking about then through this weekend, or before we get to the weekend today. 9 a.m. UK time, ECB inflation expectations. This as we report on potential changes to the language around the ECB statement going forward. 1 p.m. UK time, it's CPI inflation out of Germany. 1:30 p.m. it's the big one in terms of PCE stateside. To what extent will markets readjust around that? Expected to come in around 2.6%. 1:30 p.m. the Fed's Michelle Bowman will be talking. We're also getting central bank speak from the ECB's Villeroy. That's at 2:30 p.m. UK time. And later on the earnings front, Chevron and Exxon in terms of the energy majors.
Six Nations kicks off tonight as well. Fantastic weekend of sport coming up. Really can't wait. So it's France versus Wales tonight. France are the favourites. Wales definitely are not the favourites. It could be a tough day, tough night.
France are the favourites of the competition, aren't they?
Yeah. So precisely in the whole thing. England, Ireland tomorrow. Michael O'Leary telling me earlier on this week he thinks that the Irish potentially could lose today. That's his that's the chat coming out of Dublin.
Yes.
So it's a home game in Dublin.
Wide-ranging conversation.
It was a wide-ranging conversation on a load of other things as well. It's Pebble Beach as well. Rory hit a hole-in-one yesterday. I think it was on the 15th.
We can't play the tape, can we?
No, we can't. Fantastic hole-in-one yesterday.
Well done,
Rory McIlroy. So that's going to be worth watching
That's all the sport.
Lunar New Year, Chinese New Year.
Yep.
What zodiac sign are you? Do you know?
No idea.
Year of the snake.
Probably a rat.
You're a tiger. Okay, year of the snake. Mysterious, passionate, wise, enthusiastic, and sensitive. Trying to find year of the tiger around here.
Keep scrolling.
Yeah, keep scrolling.
That is it for the opening trade. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Tariff showdown. President Trump is set to unleash his first wave of tariffs tomorrow on Canada and Mexico, while also threatening China. Well, Bloomberg learns the U.S. is probing whether DeepSeek bought NVIDIA chips through third parties in Singapore to avoid import restrictions. Plus, stocks rise after strong earnings from Apple and Intel, while the ECB cuts rates for a fifth straight time. Well, good morning, everyone. Let's take a look at the European markets map. Now, there is quite a lot going on as the market trying to figure out what the Trump tariffs mean, whether they're actually very singular, whether they're very targeted, or whether they're more blanket, what that means for inflation. And, of course, central banks will get onto that in a second. We also have quite a lot of earnings. So a lot of focus, of course, on big tech. We had Apple, we had Intel. If we look at cross assets, you can see markets pretty much a little bit on the upside, but again, it's about 0.4% higher. The big move, I would suggest, is actually in U.S. dollar. So this is a Bloomberg dollar index because we're looking at Canadian loonie and also the Mexican peso, 1,305. If you look at gold, 2,794, there's a clear risk-off question mark, I would say, because there's quite a lot of volatility as well. There has been a bit of a buoyant sentiment on the back of Apple and Intel. A couple of other things that we watch out for is, of course, earnings here in Europe. The U.S. 10-year yield at 4.5225. Now, on Apple, it gave this reassuring revenue forecast for the current quarter, helping boost shares of the world's most valuable company after its holiday results showed jarring declines for China and the iPhone. You can see 3% higher pre-market. So for the conversations that matter, a lot of AI and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's been another week dominated by Trump, tariffs, and tech. We're joined by Christian Keller, head of economics research at Barclays Investment Bank, to discuss what it all means for markets. But first, U.S. President Donald Trump says he will follow through with 25% levies on Canada and Mexico starting tomorrow. It's a move that could lead to a trade war with the two biggest buyers of U.S. goods, and is part of the president's efforts to reshape supply chains and shrink trade deficits. Now, Trump also has his sights on China, but is considering an exemption.
Mexico and Canada have never been good to us on trade. They've treated us very unfairly on trade. And we will be able to make that up very quickly because we don't need the products that they have. We have all the oil you need. We have all the trees you need, meaning the lumber.
Now, for more on all of this, let's bring in Bloomberg's MEA News Director, Roz Matheson. So thank you both for joining us. Roz, I mean, I feel like 80% of our A-waves is really what Trump is saying, what he's thinking. When's he actually going to do policy?
Well, a lot of it seems to be still in flux. We know that some of his advisors were having very late night meetings overnight, which suggests a lot is still not set here. So what are we going to get in an announcement that may come this evening or into the weekend? Are we going to get just a blanket tariff on everything? That seems to be unlikely. Are we going to get targeted tariffs, perhaps on things like steel, but exempting, oil, gas, even autos? And perhaps with the grace period, does Donald Trump say, I am going to impose these tariffs, but maybe in a month from now, which is really allowing time for negotiation? Or does he say, actually, I got some stuff from Mexico and Canada overnight and I've changed my mind? I mean, he is very mercurial. He's someone who does change his mind, as we've seen already with things like Colombia and tariffs, for example, so they can come on and off very quickly. So there's a lot we don't know. But it is very clear the direction of travel on this. He does see tariffs as a tool, a political tool, an economic tool, and the ones that he does intend to deploy. We just don't know exactly in what fashion.
I want to ask Christian about some possible tariffs in a second. But Roz, how would you describe the last 2 weeks? Because even listening to that press conference yesterday after the air crash, it's it's unclear whether any of this is scripted, what his agenda is. He's bringing DNI in a lot, so it's very difficult for investors to just try and understand what his end game is.
Well, it's very Donald Trump. I mean, it's reminiscent in some ways of his first term as well. He moves between a lot of things very quickly, and he does seem to speak a lot off the cuff. And as a president, he speaks often, as we can see, multiple times a day. And the question is, what do we make of all of that? He's come up with an awful lot in the space of just over a week. And, blizzard of executive orders, changing this, doing that, having to walk some of that back pretty quickly, because again, when you come out with all these big announcements, you can have unintended consequences, and that's what we saw with that freeze on funding, an immediate impact and having to really walk that back. And so it's working out in all of this, what are these announcements are going to get through, what's going to stick, what's subject potentially to protracted legal problems. I mean, a lot of these things are coming up for legal challenge. What can he do through Congress? What does he do directly? How much executive power does he deploy? So for markets, it's like going through all of that to work out, how do you trade on that? But, generally people have been pretty upbeat on the outlook for the US, for deal making, for the market. So maybe that's the longer term perspective.
Yeah, and I guess, Christian, it hasn't been, as disruptive as it could have been in the first 2 weeks, which is why there's a belief in the market that this is a president that wants a deal that's transactional and that there won't be that much trade disruption. What if they were wrong?
Well, if they're wrong, then, we will get a negative surprise. I think so far as Ross said, he's mercurial. I think that's transactional, right? Because in the last minute, if there's a deal that's being proposed, he may grab it. We now know that he's already considering possibly not to put on tariffs on oil, even if he does put tariffs on Canada and Mexico, because the truth is he says he doesn't need their product, but actually the U.S. refineries do need a Canadian oil, at least in the current situation. And, we think the lesson of the first, almost 2 weeks now has been that he is continuing to be the transactional person. Now, what we have to watch now in the background is whether they are considering these universal tariffs. That's something Scott Bessent has now alluded to, the new Treasury Secretary. And that will be more going in the direction what some people in his campaign, some of his advisors say, we want to profoundly change the global trading system and basically impose tariffs on everyone. And that kind of systematic collection of revenues and having them imposed, that we haven't seen yet. The question is, will he pull through with that?
Yeah, but what does that mean for the Fed and dollar?
Well, we've seen what it meant for the dollar, because when he didn't come out right away with the IEEPA, this emergency measures to impose tariffs on everyone, the dollar fell. So there was a lot of expectation on tariffs baked into the dollar. So if he was to come through with it, we think it would mean further dollar strength. That's what theory tells you, and that's what markets tell you.
Okay, thank you both. Ross Matheson there, our EMEA News Director, Christian Keller from Barclays Investment Bank stays with us. Now, onto the tech space, and Bloomberg has learned that U.S. officials are investigating whether Chinese AI startup DeepSeek got around American export controls to buy advanced NVIDIA chips, possibly through third parties in Singapore. Meanwhile, Apple shares also rising in pre-market trading as the chief executive reassured investors that this quarter's sales will rise in the low to mid-single digits. Now, this comes after the company's greater China revenue and iPhone sales actually missed estimates. And Intel also up after its sales and profit outlook fell far short of expectations. So for more on all of this, let's bring in Bloomberg's Tom McKenzie. So, Tom, first of all, on DeepSeek, what do we know about this probe?
Well, we know that the Trump administration has started the first efforts to try and scrutinize exactly what kind of chips DeepSeek were using and whether indeed they need to increase the restrictions on those chips into the Chinese market. We know, of course, the most sophisticated AI accelerators that are produced by NVIDIA are not able, at least officially, not allowed to be sent into the Chinese markets. They have to get an export license and they don't get them for the most high-end chips. What DeepSeek says is that they've been training this model on H800 chips from NVIDIA, which used to be able to get into the Chinese market through a carve-out. That was designed, that chip was designed specifically for the Chinese market. That chip is now banned since 2023. It's the H20 now that NVIDIA can and is allowed to ship into the Chinese market. Nonetheless, at the time that this model was trained, it seems like they were legitimately using chips designed for the Chinese markets. That's the claim from DeepSeek. Clearly, the Trump administration is skeptical of that claim. They're investigating and potentially, according to reporting, could put in place further restrictions that go further down the line of NVIDIA chips that have to then go for these export controls, have to get license approvals. Essentially, they're looking at further tightening the loop and noose around the Chinese market when it comes to access to these AI chips.
Yeah, it's very clear that the West and some companies have come out swinging. What stood out from the Apple earnings, Tom?
It was a reminder from Apple that they are seeing weakness in the Chinese market. So sales of the iPhone fell about 11% in the quarter. They did talk very positively, though, Tim Cook and executives, about the prospects in India, the prospects in emerging markets, and services for Apple came in stronger than expected. So think of the apps part of the business, think of Apple Music as well. That was a beat. And importantly for the market, and this is why you're seeing upside pre-market for Apple stock today, the guidance for the current quarter came in stronger than analysts expected. So yes, there is the challenge in the Chinese market, particularly around the iPhone 16. They do not have the AI proposition there because they haven't partnered with the Chinese partner yet. So you don't get the AI functionality with the iPhone 16 in the Chinese market. Where you do get that functionality in the US, for example, Apple are saying they are seeing some pretty strong tick up there. That is driving a pickup at sales. They need to get a partner in the Chinese market to get that kind of growth. There's the domestic challenge as well. China's handset makers very, very competitive. Broadly, though, the guidance for the current quarter is what's leading to the upside in the stock pricing this morning pre-market.
Tom, thank you so much. Tom McKenzie there from Bloomberg. Daybreak coming up. We'll talk central banks after the ECB cuts rates for a fifth straight time. That's next with Christian Keller. This is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
coverage at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Well, Bloomberg has learned that the ECB may stop describing its monetary policy stance as restrictive at its next decision in March. Now, the central bank cut rates for a fifth straight time yesterday. Now, still with us, Christian Keller from Barclays Investment Bank. Christian, thank you so much for sticking around. There's a lot, right? There's the Trump tariffs, there's everything that's happening with DeepSeek and AI in general, and then underlying all of this is inflation concerns in central banks.
Yeah.
Where are markets getting their cue from?
Well, I think this time DeepSeek clearly outshone the central banks. I mean, people were very, very clear on what central banks would do this week, the Fed and the ECB. I think DeepSeek is really was an interesting part. You know, it challenged in a way the uniqueness of NVIDIA. It challenged maybe the gap between the US and China in tech. But it also gave a positive message, maybe that AI is not that expensive, not that energy intensive, and it could lead to quick application of AI and quicker productivity gains, which is what markets are generally hoping for.
I mean, does AI fundamentally change our economies? And so are we closer to that with the findings of DeepSeek?
Well, we generally hope that they will do, and there's a big question mark. Most people think it will. There's a big question mark how quick that will happen. Right. And I think if you suddenly have news around this being cheaper and easier to implement, that in general you would think accelerates the implementation and therefore the hopeful productivity gains.
What's the next? When you look at central banks, I mean, I think the Fed still dominates everything, but there's so little policy to go on by that we're not 100% sure how much higher for longer it stays. Is this really the kind of main disruption point that could hit markets?
The central banks, for sure. I think, right now markets say, look, the Fed will cut the market's price maybe 2 more times. We think they cut 1 more time. They still have somewhat of an easing bias, I think, that came through. But if we were ever in the situation whereby, the inflation impetus was such that they cannot cut or even have to talk about hikes, there was no talk of hikes this week, that would really, I think, change the market's perception. No one is thinking of hikes yet, and that would really be, I think, a negative on markets in general.
I know through all of your research, Christian, and it's very simple and well put together. You talk about Japan, you talk about the China outlook, you talk about emerging economies. What is the one story that's more complicated to tell away from the U.S.? Is it maybe the China recovery?
I think China has been complicated, remains complicated. We have been quite, I would say, pessimistic or on how they can reinvigorate growth. I think the news or DeepSeek won't change that. What we see in the data is that the real estate market and all the indebtedness around it that weighs heavily. We think Europe is an interesting story. I mean, whether there could be any new impetus on, through peace in Ukraine, maybe through political change. It will take time. But what I notice is that investors are, looking at Europe saying the sentiment is so downbeat. Right. Could that be the surprise at some point this year?
Could it?
I'm skeptical, at least not for the first half. I think it's very difficult if you look at politics where the good news should come from. And good news, I mean, really willingness in a way to undertake more fundamental change rather than just, changing small things in the policies.
I mean, there's also, I guess, the next couple of days are very critical in trying to understand the CDU and what Friedrich Merz does this with the vote on immigration, with the AfD. I mean, does Europe need a strong Germany, and does that completely depend on what happens February 23rd, Election Day?
I do think it weighs on Europe that there's so much uncertainty, not only in Germany, but also in France. And now in Germany, no matter where you stand politically, I think what you would have to wish the country is a strong majority, like a government that is stronger in governing than the last one was. And, what we see recently now, it seems more that we may not get that, because, Merz seems to have been losing a little bit. It's still early days, we have to see. But I think what we need is, as you indicated, a Germany that has a government with a vision, knows what it wants to do, hopefully then joined by France, and then they can also influence the EU, because this is, I think, what most people feel where the change needs to take place, regulation, bureaucracy, etc. It's often an EU issue, and there needs to be change, but you need the the big countries, Germany and France, to do this.
Christian, I mean, I feel like everything does depend on the U.S. consumer, right? Given all of the weakness elsewhere, are you seeing a strong labor market and consumer spending in the U.S. continuing in the next couple of quarters?
We do. We think it's softening somewhat, but if you look at the numbers, we got the Q4 data. It's a consumer that's still carrying the U.S. economy. The investment data was quite weak, but we think that was a one-off. We think actually we're quite optimistic on investment, picking up. There's a lot of optimism. But when it comes to it, the largest part of the U.S. economy is consumption, and it's the largest economy. The U.S. consumer continues to count, and we think, she and he will carry global growth, at least for the next few quarters.
Mainly despite tariffs, or again, are there so many question marks about whether, I was even listening to, I think, the Commerce Secretary saying it's not clear whether tariffs are inflationary. I mean, it's almost textbook that, prices must go up if you put a levy on it.
I mean, it's not clear. Of course, you can have a strong dollar rally, and, there may be, adjustment in margins by others, but I think most evidence points towards them being somewhat inflationary. What we are quite concerned, you mentioned the labor market, is also on migration. Again, apart from the politics, you're reducing supply in a labor market that has greatly benefited the U.S. economy because it was able to meet the demand of labor without having the inflationary impetus. If you reduce the supply of labor, that in principle should be inflationary.
Christian, thank you so much for joining us today. That was Christian Keller, head of economics research at Barclays Investment Bank. Now, coming up, U.S. investigators have successfully recovered black box flight recorders from the American Airlines regional jet that collided with the U.S. Army helicopter in Washington. So we'll have the latest next, and this is Bloomberg.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Well, U.S. investigators have found the black box flight recorders from the American Airlines regional jet that crashed in Washington. Now, we want to warn the audience that some of you may find this video graphic. It captures a moment that the jetliner and a U.S. Army helicopter collided. Now, 67 people were killed with no survivors, one of the deadliest U.S. air disasters in decades. Now, for more on this, Bloomberg global aviation reporter Benny Camel joins us. Benny, what do we actually know from the NTSB findings so far?
So the NTSB came out yesterday saying that they have retrieved the black boxes from the wreckage of the aircraft, the regional jet that collided with the helicopter. And that will be a crucial part of the investigation because they contain audio but also technical data on the flight's performance and its altitude. And altitude is actually one of the areas that are in focus here. Was which one of these planes was out of position, as it were? Was it the helicopter? Was it the aircraft? There are some reports that is sort of zeroing in on the helicopter, whether it was outside its flight envelope and whether it was too high, whether it should have been lower. That's one of the lines of inquiry that will be pursued. The NTSB is leading this, and they have been quite clear last night that they need time for this, so this is not going to be a quick turnaround. They work very methodically, very meticulously. There are professionals, and they don't want to sort of rush to any conclusions here. This is obviously a very closely watched investigation, partly because of the magnitude of the catastrophe here, but also because of the political implications. This happened in Washington, in a very densely populated part of town. This is just miles away from the White House. As we know, President Donald Trump has already weighed in. So this is going to be very closely watched.
So, Benny, Trump essentially blamed DEI and Biden for the crash. What's behind that?
Well, it was a fairly raucous press conference yesterday where he came out and said, look, on the one hand, I don't really know what happened and I have to speculate. It could have been this, could have been that. But then he went into a line that sort of seemed to blame DEI and, as an extension, Biden, saying, look, we've hired the wrong people for bodies like the FAA and the NTSB, and this will stop. So he drew a direct line between the crash and the hiring principles that have been going on under his predecessor. Now, that's obviously a fairly brazen politicization of this crash and something that normally doesn't happen. As I said, the NTSB or any investigative body usually takes the lead, and then everybody else stays out of it and stays quiet because you don't want to create a narrative that will then be very difficult to walk back, and that's what Trump has now done.
Benny, thanks so much. Benny Camel there with the very latest, of course, on this crash. Now, coming up, we'll look at how the Chinese startup DeepSeek stunned the world this week with its new AI chatbot. We'll discuss how the global AI race is shaping up. And this is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends. And I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning, everyone. Welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Tariff showdown. President Trump is set to unleash his first wave of tariffs tomorrow on Canada and Mexico, while also threatening China. Bloomberg learns the U.S. is probing whether DeepSeek bought NVIDIA chips through third parties in Singapore to avoid import restrictions. Plus, Apple rises in pre-market trading with a better-than-expected outlook, helping to offset disappointing sales for the iPhone and its China business. Now, Bloomberg understands that U.S. officials are investigating if DeepSeek got around American export controls to buy advanced NVIDIA chips, possibly through third parties in Singapore. Now, meanwhile, Bloomberg has also learned that OpenAI is in talks to raise as much as $40 billion in a funding round led by SoftBank. Now, the ChatGPT maker is in talks to raise funds at a post-money valuation of $300 billion, assuming OpenAI raises the full amount. Now, it was valued at $157 billion in October. So to discuss all of this pretty hectic week for global tech is Parmi Olson, tech columnist at Bloomberg Opinion, who's also the author of the award-winning book Supremacy, AI, ChatGPT, and the Race That Will Change the World. Now, she says that DeepSeek's new AI model that may threaten the dominance of U.S. tech giants like Meta and OpenAI by fueling even greater momentum for the open source movement in other parts of the world. So, Parmi, thank you so much for joining us. First of all, congratulations on the book. I know it's been like a bestseller, and I really urge everyone to read it to try and understand. I mean, these are people racing to really change the world, for good or for worse, right? But it's human people. Yeah. And I wonder whether DeepSeek has kind of changed. I mean, it feels like it's upended the race this week. How does it change, you know, how we view it?
People have asked me if I would update the book. It came out about, I filed it about less than a year ago. The first time I've said yes is this week, because DeepSeek is such a fundamental change to the economics of what's going on. Now, there are still a whole bunch of unanswered questions, but 100%, the fact that they were able to train an AI model for a fraction of the cost of what OpenAI and Google and Anthropic and all the other big AI players are spending really shows that you don't necessarily need a lot of money to build AI. Until now, companies like OpenAI, that's been their moat. That's been how they differentiated from others. The fact, as you mentioned, they could raise all that money and no one else can do that. Now, actually, you don't need to raise that amount of money to build AI.
So, I mean, the question is, and there's a lot of investigations on whether, for example, they used some of the NVIDIA chips through Singapore. There's also questions whether they, frankly, ripped off some of the OpenAI. Yeah. Does this stuff even matter? Because once you've proven that you can do it on the cheap, then it changes everything anyway.
Yes, I suppose it does, but those unanswered questions are important as well for policymakers, because there's been this real question of, well, maybe the U.S. shouldn't have had export controls on NVIDIA chips, because then China and DeepSeek, for example, and other companies wouldn't have been forced to think out of the box and innovate with low-quality chips. But if you follow that same logic, then the U.S. should have limits on GPU sales to American companies, because that would force them to innovate. So it doesn't really, that doesn't necessarily make sense. And at the same time, as you just mentioned, Bloomberg reporting has shown that it's possible that DeepSeek got around the export controls by just buying chips from third parties in Singapore. So I think that raises a lot of questions about whether any of those kinds of sanctions even work in the first place. Also, this question of, we saw earlier in the week, NVIDIA's stock price fell by something like market valuation by almost $600 million, $600 billion, sorry, an incredible crash for NVIDIA. But there's also now people are saying, well, actually, if this spurs more competition among smaller businesses to build AI because it's cheaper, that means they'll buy more GPUs from NVIDIA. That's actually good for NVIDIA.
So, Parmi, I mean, one question, if they did get their hands on, and there were reports about the number, if they did get their hands on NVIDIA chips, does it change the underlying business model that they offered?
Yeah, I mean, I suppose it does. It depends how many extra they were able to get. From what we've seen in reporting, something like 50,000 is the number that's going around. They did it for $6 million, which is very little when you consider something like someone like OpenAI will spend 100 million, say, to train. On the other hand, one thing they haven't figured out is inference. So training is very cheap, but actually using the AI model still requires a lot of GPU chips and is still very expensive. So that's another reason that NVIDIA is still needed in all of this.
So does it democratize? And I've heard, an economist was in earlier saying, look, if this is cheaper and we can all use it, then it will almost democratize AI. It'll be more of a force for good on the cheaper side because so many more people use it. There's still, I guess, safety and security, national security concerns.
Yes, absolutely. But I agree with that. I agree with that first part about democratizing. And it's so funny because tech companies in Silicon Valley use that word all the time, that we're democratizing the use of technology. I'm pretty sure OpenAI has used that term, but they don't actually reveal the details about how they built their models, no information on the training data, despite the name OpenAI. DeepSeek is way more open than OpenAI because they've put their blueprints on the internet, and now Meta's engineers, OpenAI's engineers are all scrambling to try and replicate what they did. It's possible in the next few months we'll see more efficient models coming from American companies now.
Parmi, and I know I need to thank you. We did a podcast together. It was, really enjoyable for 30 minutes trying to understand where this ends up. I mean, was this almost like a foreign policy from China? We don't know if the Chinese government, played into it, but I feel like the timing is quite perfect for the Chinese.
It really was to have come right after this announcement of the Stargate project, that how much money is just going to be spent on infrastructure projects for AI, earnings announcements this week in which companies have to talk about their CapEx spending on AI. It's a very awkward timing for American companies and for the American government. I don't know if that was planned, but it certainly is awkward timing.
I mean, how can the U.S. respond? So again, we've heard OpenAI, they're investigating, they're raising $40 billion. Does this just equalize? I mean, does this just blow, the U.S. out of the water in terms of a race, or can they come back from this stronger?
Oh, I don't think it blows anyone out of the water necessarily. It's absolutely created panic. But the best thing that American companies can do is compete. Right. And that's what's so great about this moment, in spite of how frightening it might be for a lot of shareholders and businesses. Now, for example, tech companies in the U.S. have been so focused on making the biggest model. There's this kind of ego-driven race to get the biggest cluster of GPUs, for example, and not enough on helping businesses find ways to make AI useful for them and design good products. That's actually been quite neglected over the last year. But that's a way that American companies can absolutely differentiate from these Chinese alternatives, for example. So hopefully this will be a wake-up call in terms of not focusing so much on who's got the biggest model, but actually helping and building good products for businesses.
Parmi, is this limited to large language models, or could it actually change the the scope of research and everything else we know AI will be used for?
I think for now it is limited to large language models, but also image generation. DeepSeek has come out with an image and I think an image analysis and image generation model. So for now it's AI, generative AI, but who knows where that could also spread to.
Parmi, thank you so much. Bloomberg Opinions, Parmi Olsen there, an author of Supremacy, AI, ChatGPT, and the Race That Will Change the World. You may add a new chapter, right, on DeepSeek. There you go. And you can hear more from Parmi on this week's In the City podcast. She joins Allegra and I to discuss what DeepSeek's big reveal could mean for companies outside of Silicon Valley, including here in the UK, and what Britain must do to have more influence in the global AI conversation. You can listen to that wherever you get podcasts. Now, the parents of FTX co-founder Sam Bankman-Fried are said to be exploring ways to secure a pardon for him from President Trump. Bloomberg has learned that Joseph Bankman and Barbara Fried have had meetings with lawyers and other figures considered to be in Trump's orbit about clemency for their son. It's unclear if they've reached out directly to the White House. Now, the one-time crypto billionaire was sentenced to 25 years in prison for fraud. Coming up, a showdown in the German parliament as a favorite to become the next chancellor is accused of breaching a firewall by turning to support from the far right. We'll have the details from Berlin next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
February 6th. After years of stagnation, Europe's largest economy is on the brink. But Germans will soon have their say.
Tune in to Bloomberg for conversations with some of the country's most powerful voices before the votes are cast to find out how the next government can get Germany back on track.
The Germany Election CEO Briefing, February 6th at 9 a.m. London time. Only on Bloomberg Television. Context changes everything.
The German parliament is set to vote on a hardline immigration bill, which has caused a stir not just because of its tougher stance, but because Friedrich Merz, the favorite to become the next German chancellor, is relying on support from the far right to get it through. Now, he's faced a fierce backlash, including accusations that he's breached a firewall aimed at keeping the far right AfD from power. So the debate is taking place right now, and Bloomberg's Oliver Crook joins us from Berlin. Ollie, this is a pretty big controversy. I think a lot will depend on how Merz and the CDU play it in the next couple of days. What do we know so far?
Yeah, so listen, Francine, I think this is probably the most consequential development that we've had since the government fell, basically back at the end of last year. And really, this is going to be, I think, really very defining in terms of what happens in this election. And just to recap for people what's going on here exactly, it's the CDU ahead of this election trying to put forward this immigration bill, much harder stance on immigration, and would be, if they go forward with this in the vote that's going to start in about, a few minutes' time. They're debating right now for about an hour, then they'll cast their ballots, and we should get the results at about noon or 1 o'clock local time. This would be the first time, Francine, since the Second World War that the AfD, that an extreme party, would vote with a mainstream party. And this is, of course, what has caused a lot of controversy here in Germany, has caused thousands to take to the streets and protest over the last few days. And the way that Friedrich Merz is basically billing this is saying that basically, I'm not going to let, just because people I disagree with agree with a good idea, get in the way of a good idea. But of course, this is without really sort of precedent within the sort of modern times of Germany here. And of course, it could colossally backfire. And this is something that we're going to have to watch very, very closely going into this weekend, because, Francine, this has the real potential to change the polls in a radical way.
Yeah, so what's Merz's plan here, and how is it going to pan out?
Yeah, so listen, from his own words, what I think is interesting is, regardless about what you think about how he's going about this, Friedrich Merz is dealing with a problem that is a serious problem, not just in German politics, but across politics in the rest of Europe. You have the far right coming up, getting a huge amount of support because of a number of policies that they want on immigration, and he wants to prove that basically they can be tough on immigration. And what he said yesterday, as recently as yesterday, is that he wants to ensure that the policies of his party, of the CDU, are also corrected to such an extent that a party like the Alternative for Deutschland is no longer necessary in Germany. So basically trying to tack to the right, particularly on this issue of immigration, in order to undercut some of the AfD support. Of course, Francine, that could just backfire, because some people will say you're just trying to pander to the AfD. We actually want the original thing. But we've had backlash not just from parties outside of Friedrich Merz. We had Angela Merkel wading into politics. Very rare for her to do so, coming out against this. We had a number of church groups, a number of the sort of religious groups within Germany as well. I mean, this is the Christian Democratic Union, the CDU, coming out against this. So this could really backfire. On the one hand, is it Merz just being sort of more pragmatic and dealing with the reality of very fragmented German politics in order to sort of consolidate some momentum? Or is this basically, as some are saying, he's basically lighting the party on fire and showing himself to be very, very unpredictable? One of the polls that we saw a couple of days ago, and I'll end with this, Francine, just 2 days ago, is we saw within the polling for the first time only a 6-point spread between the CDU and the AfD. We should say it's very unlikely that the AfD would get the #1 spot here in Germany. That being said, a couple months before the election in 2021, the CDU had been leading with 12 points of the SPD, and they managed to turn that around in that short period of time. But again, going into this weekend with an absolute bomb for German politics, we'll have to see what the polls say on Monday, but it could really materially change things in this election in Germany.
Yeah, definitely could. And you could see some of the vote splitting, of course, going to the Greens and the SPD. Ollie, thank you so much. Oliver Crook there in Berlin. Coming up, how much are bank bonuses actually worth? And why do they differ from U.S. and European banks? Well, that's the topic of today's Big Take. And that story is next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings tick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
So, how much are Wall Street bank bonuses really worth? Well, that's the topic of today's Big Take, looking at the divergence between U.S. and European bank bonuses. For more on this, Bloomberg's Jenny Serrain joins us. So, Jenny, first of all, it's a fantastic piece. You can read it on the terminal. We've pushed it on social media. I mean, and Bloomberg spent like months trying to do this one-of-a-kind analysis. What did we figure out?
Yeah, I mean, it was a labor of love, as it were. What we really figured out is that the number that these bankers and traders are told on compensation day is really not usually what they end up with several years on once their bonuses finally fully vest. And some of the big takeaways that we revealed was, you know, for U.S. banks, a lot of times those guys end up walking away with a lot more than what they're promised. And for the folks on this side of the pond, they end up walking away with a lot less. So there was a pretty big divergence between the two sides of the Atlantic.
Yeah, I mean, and we have, you know, graphics and charts, and there's a really, really, you know, difference. Like the stark difference between the U.S. and Europe is quite, you know, crazy, actually. Is there anything that the Europeans can do?
So it really gets down to stock prices. So this is why you hear folks like Sergio Armati or Christian Suing, like really talking about, you know, trying to turn things around, get their returns up, make that case to investors that they're on the right path and kind of doing the right thing and that they're able to compete with the likes of a JP Morgan or a Morgan Stanley or Goldman Sachs. I think the proof will ultimately be in the pudding. And to be fair to them, the gap has been closing. So they're getting it up a lot more in recent years, and especially now with President Donald Trump in place. I think folks are really expecting bank stocks to be on a tear these next couple of years. So this bonus season should be an especially happy one for bankers and traders across Wall Street.
Yes, it's Wall Street. So, you know, we're in the middle of this like compensation season right now. And so a lot of happy faces and celebrations in New York and basically Wall Street.
Yeah, no, I think that's exactly right. So I think it's the last year is really based on kind of what are the forward-thinking expectations for where bank stocks will go from here. And because those expectations are so high right now, that's why you're seeing that gap really narrow. And so it'll be sort of interesting to see if it all comes to bear. One of the things we also note in our story is, you know, fortunes can change on Wall Street really quickly. So just a few years ago, Credit Suisse was talking about giving out, you know, some really nice stock-based awards, trying to keep folks happy, keep them retained. And then just a month later, they were non-existent. So things can turn around really quickly on Wall Street. And so even though everybody's feeling really good right now, things can change in an instant for these traders and bankers.
And Jenny, I mean, there's so much anxiousness, frankly, in Europe. Are bankers worried about their jobs instead of bonuses?
Yeah, no, I think that's actually a really good point. This week we've had a ton of news. You know, you had HSBC announcing that they're going to get out of some parts of investment banking. You had, I think, Deutsche Bank said it's going to be the year of reckoning, 2025. So I think absolutely. I think a lot of bankers are on edge, and that's, I think, even more important why this calculator and what we've given readers today is so cool, because if you're having anxiety and you want to kind of know what's my financial picture a couple of years out, that's one of the things that this calculator can do for folks.
Okay, amazing. The calculator is pretty cool, so you can go and check it out depending on where you're based and also I think who you're employed by. Jenny, thank you so much, Jennifer Serain there, our team leader here in the UK, with that big take on bankers' bonuses. Now, this week we have the Fed, we had ECB rate decisions, while the FOMC held, the European Central Bank cut by 25 basis points. Now, bond traders are focused on the potential impact of Donald Trump's tariff threats on inflation in both regions. Now, for more on this, let's bring in Bloomberg's MLive's Van Ram. Van, thank you so much for joining us. I mean, I'm looking at Treasury and I'm looking at dollar. What are your predictions?
Morning, Francine. So good to be talking to you. I think it's hard to be constructive on treasuries at this point because if you look at core PCE, we are getting the core PCE reading for December in a couple of hours from now. So what that is going to show us is about a reading of 2.8%. Now, in the past 1 year, if you look at the average, we have been bobbing around exactly 2.7 to 2.8% range. Now, the Fed factored in a rate of 2.5% for this year, but that's a tall order yet because, as I said, core inflation really hasn't budged at all. And if core inflation stays around 280, and then you add a neutral rate of 100 basis points, which is what the Fed estimates the neutral rate to be, then you're already talking about a neutral Fed funds rate of 4%. So we are almost already there. So the room for the Fed to be cutting rates is not very much. Therefore, that's going to cap the downside yield on 2-year treasuries, and that will also limit the any rally in the 10-year space. Francine?
Van, you're one of my favorite people when it comes to modeling. Is it impossible to model anything that comes from Trump policies and the Trump administration so far because we don't know whether they're targeted, and also the president is looking for a deal, so we don't know where we end up in any of that, and so the impact on inflation, the range I imagine could be quite big.
Yes, absolutely. I mean, we don't know whether he's going to follow through on his threat of 25%, for instance, with Canada and Mexico, and if he does, what the fallout will be, and whether he's going to use that as a negotiating chip, as we saw happen with other trading partners recently. So the question is how much of an inflation impact it's going to have. My reckoning is that it is going to have a significant enough inflation impact to deter the Fed from cutting rates further. Now, the Bank of Canada did a simulation in 2019 when Trump was back in office then to see how much of an impact tariffs would have on the Canadian economy. And they reckon that, it will set GDP back by 6% and cause the loonie to tumble 25%. I don't think that the markets are prepared for the loonie dropping anywhere near on that scale at the moment. So I think there is huge shocks coming for the FX and the rates markets in the coming month if Trump follows through on his threat.
Yeah. Van, why is it so difficult for the ECB, governors, but also President Lagarde to give us an indication of where the neutral rate is?
Well, I mean, she's playing her cards close to her chest, I think. I think she's got a pretty good idea as to where the neutral rate, according to the ECB forecasters researchers is. That paper is coming out on February 7th, but I suppose President Lagarde has some kind of inside track on that. I think she said in Davos that the neutral rate is somewhere between 175 and 225, and no one is more familiar with Davos than you, Francine. But I think that, if 175 to 225 holds, I think that the ECB would get to 225 and then decide to wait from there on before moving further, and that will depend on what we get with Trump and tariffs.
Van, as always, thanks so much, Van Ram there from MLive. Now, up next, the Bloomberg Brief, Manus Karani in New York. I know he'll also talk a lot about dollar levels and treasuries. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Graney. You're welcome to Bloomberg Brief. Let's set that agenda. A tariff showdown. Markets brace for President Trump's latest pledge on tariffs. When will they kick in? The dollar ticks higher. More deep-seek scrutiny. U.S. officials are said to be probing the Chinese AI firm on how it acquired NVIDIA chips. Big tech's sigh of relief. Apple's outlook reassures investors after declines in Chinese sales. Intel's revival, the effort pays off. Good morning to you. Equity markets at the moment are taking their lift from tech rather than the threat of raging tariffs this weekend. 25% on Canada and Mexico, possibly China. Or will it be another flash clash like Colombia? Either way, Apple and Intel bolster the narrative. The flow of money. Tech funds took in $6.5 billion this week. That is the most in 3 months, as NVIDIA is still down 12% on the past 4 days in the cash. And there's a lot more recalibration to come. January saw the biggest inflow of stocks into the U.S. since 2018, $93 billion, according to the Flow Show. Bond market, we're counting down to PCE and PI. Over the past 5 days, we have retraced by 9 basis points in the 10-year government bond. So we're down by 9 basis points on the AI shock and NVIDIA shock that we've had. We'll have Mike McKee with us talking through some of the data ahead on the day. There are other stocks that are on the move. They're in the headlines. Intel reporting better than expected fourth quarter revenue, but cautioned that the push to be more competitive, it's still a work in progress. Micron falling, as Bloomberg reported. The rival Samsung got approval to supply a version of its 5th generation high bandwidth memory chips to NVIDIA. And Atlassian surging after the software company reported second quarter results that beat expectations, and they raised their full year forecast. Coming at this hour, we have Victor Hjort. He joins me from BNP Paribas, and Joel Kalina of Wedbush on the big tech stories. Well, currencies are moving, whipsawing to say the least, after the move from President Trump reiterating his tariff threat on the nation's neighbors, Canada and Mexico. Tomorrow, about $900 billion in goods from both nations could stand to come under tariffs as high as 25%. That is the imminent risk. Kevin Whitelaw is tracking the story. Kevin, what comes to my mind here is we've gone from gradualism at the start of the week, suddenly back to max potential on both neighbors. I mean, this is what you call policy on the hoof.
I mean, you know, we're going to have to see what the actual final result is. So far, all we've really had are a series of pronouncements that do seem to sort of shift almost every day from the president. And so he has given himself his own deadline of tomorrow to unveil this. We'll see if that's actually going to mean something, and we'll see what it actually is that he's planning to unveil. I think what everyone's still trying to understand, and quite honestly, Trump himself may be trying to figure this out too, is what is he really trying to accomplish here? Is this really part of a negotiation where he's trying to get a set of concessions? Or is this really about a broader effort to remake both the idea of the U.S. industrial and manufacturing base, get companies to base more factories in the U.S. rather than its neighbors? Or is it even more about trying to remake sort of the way America's revenues work and move away from income taxes toward tariff revenue? Those are three actually different goals, and it's really not clear which of those is paramount in Trump's mind.
And to a certain extent, a lot of commentators are saying this is about creating the sphere of influence, the geographic sphere of influence for the United States of America relative to Russia and relative to China. Here's the thing. This country imports about 4 million barrels of oil per day from Canada and 500,000 barrels from the south from Mexico. That's the carve-out that the market wants to know and understand most of all, isn't it?
I mean, that's definitely one of the big carve-outs. That is what the commodities markets are looking at in particular. And Trump has said he doesn't know whether it's going to cover that or not. I think he's still trying to figure out what his actual proposal is. But that does at least suggest that exemptions may be an element of this if he does indeed go as broad as he's been saying. For all we know, there could be a lot of exemptions. One thing Trump has to balance here, of course, is the potential inflationary effect at home in the U.S., tariffs have the potential to make that worse. And that was a key pledge Trump made to his voters, was that he was going to bring inflation down.
The Canadian Foreign Minister, Melanie Joly, is in Washington. Now, she's breaking it down in terms of the oil narrative and the border narrative. What she said. Okay, we seem to have just had a... Kevin.
Oh, sorry. Yeah, no, I'm sorry. I thought you were going to play a clip. I apologize.
No problem. My apologies for intonation. It's the Irish in me. I mean, look, this comes down to the hustle. The Canadian Foreign Minister is in Washington. She's breaking it down very much into pieces of negotiation. And she's saying on the border, I think we're getting traction.
Well, I mean, look, Canada has to try to look and see if there is a way to head this off. They're going to talk about all the things they're doing. Trudeau tried this before. And she's going to keep trying this as they try to figure out if this really is a negotiation. The Trump sometimes does want to take what is said by other countries and claim it as a victory. There's obviously the hope that's going to happen. But what all of these countries also have to worry about is if they start making various deals, making various concessions, making various promises, Trump could still turn around and tariff them anyway.
And the risk for China, I mean, we've talked about to the north and to the south, but the risk for China, I would say, has exponentially changed as a result of now the investigation into NVIDIA. You have Howard Lutnick talking about, well, look, export controls don't work. You need something else. Has the heat just been turned up as a result of the NVIDIA investigation on China?
I mean, I don't think it takes much to turn the heat up on China when it comes to where Trump is. He's been very inclined to go after China over its trade policies for a very long time. It was a huge focus in his first term, and it's going to clearly be a focus now. I think the bigger problem is they can't quite figure out yet how they want to go about doing it. How do they actually put pressure on China without China coming back in ways that could be even more economically damaging to the U.S. U.S. remains incredibly reliant on production and other things that are part of the supply chain from China. It's just not clear that there's a way to sort of get into something without doing really sort of more harm to yourself. And that's what he's going to have to try to balance. He doesn't even have his real sort of trade team in place yet, and so he is sort of trying to operate on this from a bit of a sort of throw it together until he can get his full team into place.
Okay, let's see what the headlines are over the next 24 hours. Kevin Whitelaw there tracking the tariffs. Now, Bloomberg Scoop, the US is probing whether DeepSeek is using the chips it says it's using. Officials are looking into whether the Chinese AI firm bought advanced NVIDIA chips through a third party in Singapore, circumventing the US restrictions on advanced technology exports. Tom McKenzie is with us. Tom, look, this probe is taking shape from a number of agencies around DeepSeek and how they maybe circumvented these restrictions. That narrative is not new, but what do you think that this investigation is going to press upon?
It's going to press upon trying to find out exactly what chips DeepSeek was using. As you say, this is the White House, this is also the FBI. They're looking at Singapore, they're looking at whether or not China, whether or not DeepSeek in Hangzhou actually sourced higher-end chips than they've declared publicly, possibly from second parties like Singapore. So that is something they're scrutinizing. They can see that NVIDIA, for example, gets about 20% of its revenues from Singapore. NVIDIA says that is not chips necessarily that are being used in Singapore, but it's booked chips, so booked deals and booked orders. So NVIDIA kind of disputing that. Nonetheless, that has clearly drawn the spotlight of lawmakers and officials in Washington. What DeepSeek have said is that they trained one of their most recent models on an NVIDIA chip that was allowed to be exported to the Chinese market, the H800. That's what DeepSeek is saying, about 2,000 of those. Question is, do we trust them? Do they trust them in Washington as to whether or not that is the case? Because, of course, there are big question marks, not just from lawmakers and officials, but also other tech companies like Microsoft and OpenAI as to how DeepSeek built a model in about 2 months for about $6 million that has the same capabilities in terms of O1 from ChatGPT, but also Gemini and Anthropic. That has drawn this attention. So we'll see what unfolds, but clearly, the spotlight is on, to some extent, DeepSeek, and to some extent, Singapore as well, to come through with some answers.
Well, of course, it's raised Howard Lutnick's hackles. The Commerce Secretary saying export controls not backed by tariffs are like playing whack-a-mole, the whack-a-mole model. Now, you've got DeepSeek coming under investigation. You've got Alibaba coming out with new news. You've got a whole host of things, and AI, OpenAI, back in the market to raise capital with a pretty substantial valuation. Who's ready to step up? It's SoftBank, isn't it?
Yeah, Masayoshi Son exactly coming through with possibly 15, possibly 25 billion US dollars. So for all the question marks about, hang on, do we need to be spending this much money on chips, on data centers, on energy, on servers? Well, the answer seems to be from Masayoshi Son and SoftBank, yes, we do, and we're going to be there. We're going to commit potentially up to 25 billion US dollars. That would take SoftBank to being the biggest shareholder in OpenAI. And you're absolutely right. The valuation, my goodness, you've gone from 157 billion US dollars in October in terms of the valuation for OpenAI, potentially to 300 billion right now. Look, Sam Altman's part of the mix around Stargate. He wants to be spending on that infrastructure, the commitment alongside Masayoshi Son and Oracle to spend about 100 billion US dollars just for starters on data centers, on infrastructure, on energy to support the US push into AI. They want to ramp that up to 500 billion. This is part of that story.
Okay, well, they certainly made a commitment. They're in for 18 billion to Stargate. Nobody's stepping back from the capex at the moment. Tom, thank you very much. It's been a pretty turbulent week in tech. Other stories trending on your Bloomberg terminal. This is what we got for you this morning. Apple gave a reassuring revenue forecast for the current quarter. Sales would grow by a percentage in the low to mid-single digits, which calmed investors' nerves. Meanwhile, the results renewed concerns about the iPhone sales, as well as China. Walgreens is suspending the quarterly dividend it paid for the past 92 years. It's a bid to conserve cash. The decision stems from the need to strengthen its balance sheet by reducing debt and improving free cash flow. Suspending the dividend is expected to save around $650 million in the fiscal year 2025. And Samsung's chip division reported a smaller than expected profit due to the increased research and operational costs. Total capital expenditures came in at $37 billion in 2024, and executives said the spending would remain at a similar level. Coming up, keep calm and carry on. That's the message for credit from Victor Hjort from BNP Paribas. We'll catch up with Victor in just a moment.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Earnings season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
Bloomberg Brief. I'm Manus Cranny in New York. We got there. It's Friday, and these bond markets have had a lot to digest. Victor Hjort is the global head of credit and equity derivative strategy over at BNP Paribas. Victor, good to have you with me. I just think of the week that we've had. We've had shock therapy in tech from AI. We've had Powell push the pause narrative, really establishing that. And we're just about to get potentially max tariffs tomorrow morning. When you look at volatility, it's not exploded exactly, given that onslaught of event risk.
I think you're spot on. I think there were a lot of expectations at the start of the year and around the election that Trump was going to be a source of volatility. But I think you have to offset that against the fact that there are a lot of, let's call them inherent volatility dampeners in the market right now. I think the key word here is really balance. When you look at corporate bonds, there is a very good balance between supply and demand for bonds, partly because yields are so high. It is much more expensive for companies to issue bonds today than they were a few years ago, including when Trump first got elected. That sort of dampens the amount of supply that the market has to absorb. And when you look at the macro fundamentals that are driving the market, they're also pretty balanced. The US economy is a bit hotter, the European economy a bit weaker. But when you look at things like PMI data, it tends to run pretty close to 50 or a little bit north or south of that. Also pretty good balance. And ultimately that balance, I think, is what really offsets some of these much more headline-grabbing events that you referred to earlier.
And if I look at the growth story, I just refreshed myself. We came from 3% in Q3 to 2.3% yesterday. But the consumer is strong, growth is steady, employment is steady, and that underpins for you why it's, keep calm and carry on. On U.S. credit relative to the rest of the world?
I don't think that the U.S. credit necessarily is a better story. American exceptionalism is widely appreciated by most people today, and I don't think there is any reason to question it fundamentally. But, people are a lot more bearish on things like Europe, for instance, which clearly has not had a compelling growth story. But it is interesting when you look at the world of credit. Since the day that Trump won the election, the single best performing credit market in the world has been European investment grade credit. I don't think that people necessarily thought so
on the day that Trump won.
Does that endure? I mean, you listened to Christine Lagarde in Davos last week talking about an existential crisis or a moment in Europe. The ECB is in cutting mode and may well get to neutral in March.
So I think the expectations for Europe are very low. And I think that's what we're seeing in the credit market. That's what we're seeing in the equity market. It's not a very high hurdle to beat. I also think that when you look at corporate bonds, the backdrop for Europe is, let's call it sluggish growth, dovish central bank, sluggish and dovish. It tends to be a pretty good backdrop for risky assets. It tends to be a very good backdrop for corporate bonds. And my guess is that continues.
The framework of this week for global central banks was very much activist Canada, activist ECB, pacifist narrative growing in the United States of America. So this then pushes us more towards spreads and differentials, 200 basis points difference between us and Europe. As you say, I understand Europe is rising, but that spread differential has a flow consequence.
Definitely, and a positive one, obviously. And I think that when we look at rate risk, we've had basically two kinds of rate risk to deal with. One is the, removal of expected rate cuts, Fed rate cuts this year. We passed that with, I think, flying colors. The other rate risk is a bit more tricky. That would be if inflation dynamics start to push the Fed in a way that they actually need to consider rate hikes. So up until now, it's fair to say that high yields are good, exactly as you say. It attracts demand into the market. Once you go into rate hike territory, the dynamics start to change a little bit, and also for fundamental reasons. There is a debt maturity wall that is quite a bit higher today than it was a few years ago, including 2022, when we had the big rate hikes. Back then, corporates had spent the previous years terming out their debt maturity profiles. They're a bit shorter now. And so if we were to have rate hikes, I think that would be a bearish event for the market. But so far, high yields are good for credit.
Right now, as I look at risk in the next 24 hours, there's a potential of 25% tariffs on Canada and Mexico. We don't know what it will be. It could be a different calibration altogether from where we start today. But how do you look at the potential inflationary impact of the proposition of Trump tariffs too, relative to the first round, which ultimately were not hugely inflationary?
They're probably more likely to be inflationary this time around. Now, the starting point is obviously, what are people actually expecting? It's not that Trump has been quiet about his intentions here. So I think the expectations are clearly not that we're not going to get any tariffs ever. Question is really what are those expectations? A simple guess from just speaking to people in the market might be that around 10% on Canada and Mexico, maybe 20% on China. That's sort of ballpark what people are expecting. I think the real question is whether we exceed those expectations. That's kind of where you might see a negative market reaction.
I think the line of the week goes to one of our guests who said it's a relative crisis with tariffs. It's just not a full-blown crisis with tariffs. Victor, thank you very much. Victor Hjort of BNP Paribas. Of course, we'll know more about those tariffs when you waken up tomorrow. Certainly during the day, you'll be on your Bloomberg terminal. The dollar is up this morning at the year's high for 2025. The Canadian dollar took a pasting yesterday on that breaking news. Let's see what the tariff risk really turns out to be.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Front page news this Friday looks like this. The Journal leads with reports that Amazon is ramping up its spending on X. That marks a major shift after pulling much of its advertising more than a year ago over hate speech concerns. The FT leads with politics. Tulsi Gabbard is facing bipartisan doubt over her confirmation. She was grilled over her past support for Edward Snowden, sympathies for Russia. Gabbard pledged to be no one's puppet and pushed back against the suggestion she sympathized with President Putin. And the New York Times leads with the mid-collision in Washington, renewing concerns about safety lapses. The FAA report said the air traffic control was understaffed at the time. The crash killed 67 people with no survivors on either aircraft.
Also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Menace Cranny. Let's set your agenda. A tariff showdown. Markets brace for President Trump's trade pledges to kick in. The dollar ticks higher. More deep-seek scrutiny. U.S. officials are said to be probing the Chinese AI firm on how it acquired NVIDIA chips. And big tech's sigh of relief. Apple's outlook reassures the investors after declines in China sales. Intel's revival efforts pays off. Good morning. Right now, equity markets are taking their cheer from tech, from Apple, from Intel. They seem less concerned about the tariff risk that the President of the United States has flown up again. The risk of 25% maximum kind of tariffs day one tomorrow. Nomura still warned that NVIDIA is down 12% on the week. The money is flowing into tech funds. This week they took in $6.5 billion. That is the biggest inflow in 3 months. And in January, equities pulled in $93 billion. The biggest inflow since 2018. The bond market in part supports the longer duration play, the 10 basis points. We were down 12 basis points at one juncture on 10-year government bonds. We pulled a little bit of that back. Strong consumer spending yesterday. We're counting down to the PCE. We'll talk you through that in just a short while with Mike McKee. 453 is where we are. As I said, it's been a big week for big tech, starting with a potential gray swan in DeepSeek, and rounding it off with the earnings from Apple and Intel. Intel delivering a revenue beat for investors watching out for signs of the turnaround, while Apple keeps investors happy with the forecast. Joel Kalina is managing director for Wedbush Securities. He's with me now. I mean, I've got to say, there's deep skepticism here. This market was soothed by a call for low, mid-single-digit recovery. China is bruised, and iPhones are under pressure. Were you convinced on the call?
You know, it's Apple's become one of these stocks. It's a cult stock on the retail side of things, and it's been such a big winner performer for so many households across the globe. On the institutional side, it's a completely different story. Long onlys have been underweight this thing for years. Hedge funds, it's sort of the perennial funding short. And like you said, there's just been a lack of growth and to some degree, a lack of innovation. And so far, Apple, up until recently, was trading extremely negative on almost every negative check that we gotten, whether it was share loss in China, lack of, positive reviews regarding the rollout of their AI, Apple Intelligence. And here we are, stocks within striking distance of highs, and the quarter was okay, not great. Clearly, it's their services side of the business that's doing the bulk of the heavy lifting to the story. But I did think Cook did a really good job last night in the call, kind of massaging fears around kind of China, was really just kind of saying that there's channel adjustments ongoing. He was hopeful that stimulus would kind of come through. And then even around AI, he did say kind of regions where Apple Intelligence has been rolled out, they're seeing, more accelerating upgrade cycles. So we'll see. I can tell you the institutional side, people are skeptical, but it's a stock that just, it's Teflon at times, and it's a tough one to fight.
Brilliant description, Teflon. How much debate is there out there about peak Apple? I put this to you because Zuckerberg on the Joe Rogan podcast, this is what he had to say. They've used their platform to put in place a lot of rules that I think are arbitrary. Well, we know what Zuckerberg did with rules this week. And I feel that they haven't really invented anything in a great while. This is the big issue, isn't it? Steve Jobs invented the iPhone, and now they're just kind of sitting on it 20 years later. That is the big risk, isn't it? They need to fundamentally change the upgrade cycle, and they need to convince me I need something new in my life.
Yeah, and that's been part of the problem. And again, I know the stocks recovered the past couple of weeks, but part of also the negative, bearish narrative earlier, coming out of 24 was, increasing reports that even the iPhone 17 and 18 just weren't going to be driving a super cycle because of the lack of major hardware upgrades. And that's been a fact. And obviously we're all dealing with sticky inflation across the globe, and people, sort of like cars now, are just not rushing out to get the new iteration of the phone every 2-3 years. You're going to run the phone into the ground until you get a cracked screen or the battery goes out on you. But I thought Zuckerberg, I don't think anyone terribly disagreed with him. Yeah. It's pretty known that Apple's been a little bit kind of lacking on that side. Vision Pro has been a failure for many reasons. And like in Apple Intelligence, bulls are really expecting big things on the AI front, and we're yet to get it.
I'll tell you, there's a few bulls are worried about NVIDIA. I'm just looking here. We're over 4 days, we're still down 12%. Why is it still down 12% if there's nothing to worry about from, the other side of the world?
Yeah, I think first and foremost, I think the Blackwell ramp there's been a lot of issues, overheating, just lack of supply. And then there's also, you have this DeepSeek kind of rollout where, now there's a lot of investigations. How is kind of, NVIDIA, how much are they selling into China? I think 20% of their revenues go through Singapore. And I can tell you, most people are kind of pinpointing that's where kind of China is securing their more advanced chips that are supposedly on the restricted list. So I don't foresee, Trump and Lutnick kind of backing down on this. They want to restrict China and their access to these chips. And I struggle to see how NVIDIA isn't negatively impacted by that. With that said, the stock did act great yesterday. I think it made local lows and then it closed at its highs. But what we're seeing also within the chip world, especially at the advanced level, more of the hyperscalers are preferring ASIC solutions, so they can more customized chip solutions can lead to better performance, and they can just do more with it. So Broadcom, Marvell, those are the names where I'm seeing those NVIDIA dollars flow into.
Look, we can talk about the offer on the DeepSeek story. Who are the winners of DeepSeek? I saw somebody on the show yesterday say actually Apple could be the winner because it's smaller, compacted AI, and you can put it in your iPhone, you can put it in your watch.
Yeah, that's the thinking, right? Like a lower price will eventually lead to kind of more more broad-based adoption and usage. I think first and foremost, what I've seen in my conversations this week with tech institutional investors is, obviously Monday was a little bit of panic, right? There was a lot of shoot first, then ask kind of behavior. Hardware and kind of the power names took the brunt of the P&L pain on Monday, but cooler heads are prevailing, and it's pretty much well understood that the software complex probably stands to benefit. Lower inference cost will lead to kind of lower need for power, and just continue to lead for more demand for AI agents. Lower cost will bleed into higher revenues and better margins. So to me, software seems to be at the forefront of this DeepSeek kind of revolution, whatever we want to call it. It's only been a week old, but that's where most of the dollars are flowing into.
Yeah, well, that investigation is now live, we understand, in terms of how and did they get access to their chips. And as you say, that can have repercussions. Joel, thank you very much. Joel Kalina there of Wedbush on the tech agenda. We're counting down to what the announcement will be from the White House tomorrow in regards to Canada and Mexico on tariffs. The consequences can be profound on the oil market. We import 4 million barrels a day from north of the border and 500,000 barrels a day from south of the border. What you're looking at here is oil managing just to pause and drop. Goldman Sachs have a big note out. They say, look, if these tariffs kick in on oil, you're looking at $93 on WTI in the short term. Gold also just off a record high. Again, there's been a huge flow to safety in the gold market. You're just looking at this over the past, that's Brent over the past 6 months, I should say to you. There's some big issues in the oil market, because you have the prospect of higher tariffs maybe coming to bear on Russia. We'll let you know what happens with those tariffs as we go through the next 24 hours. Coming up in the show, it is the president's tariff risk. He prepares to slap Canada and Mexico with 25% levies tomorrow. More on the story in just a moment.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Brief. I'm Manuscrani here in New York. Our top story this morning, FX markets recalibrate after President Trump reiterated his tariff threat on Canada and Mexico. On Saturday, about $900 billion in goods from both nations stand to come under 25% tariffs. Brendan Murray, who leads our global trade coverage, joins me. Brendan, the start of the week we were talking about, or over the past 10 days, we talked about gradualism, universal gradualism, and here we are, we're back almost at max, max threat. Do you think that we will go to the max threat tomorrow morning, and what are the consequences economically for Canada and Mexico?
Yeah, I mean, there's a cloud of uncertainty over what Trump will do. I think there were basically three scenarios. He'll put blanket tariffs on Canadian and Mexican products of 25% and say that's it, no negotiations, it's happening immediately. This is the beginning of the big rebalancing of trade distortions that he's complained about. He could come out and say, Canada and Mexico have done what I've asked them to do on the border. We'll give them a reprieve for now. Those are the two least likely scenarios. I think the likeliest would be something in between where he says, I'm going to put 25% tariffs on Canada and Mexico, but I'm going to give them a couple weeks to negotiate and try to come up with a solution that I'm happy with. That would give them a sort of a grace period for the tariffs to kick in.
There seems to be some narrative in the market that because it's around fentanyl rather than leaning into fentanyl and border control, rather than perhaps trade, that there is some light for an off-ramp. When you look at this policy, Brendan, is this driven, do you think, by supply chain or by geopolitical sphere of influence for this White House?
Yeah, the White House in Trump's first 10 days or so has indicated that it's really on two tracks here. There's the tariff threats for geopolitical purposes, the way he came after Colombia and scored a fairly quick win, at least optically. And then there's the longer-term strategy where he asked for reviews of various departments with an April 1st deadline. And that's more aimed at rebalancing the structural problems that he sees in America's trade relationships with China, with Mexico, with Canada, with the European Union. So it's really a two-pronged strategy, and the Mexico-Canada situation looks to be the one that's aimed more at the sort of geopolitical issues he's trying to resolve for a domestic political constituency.
Brendan, thank you very much. Brendan Murray. on the tariff risk. Now, let's head to Ronald Reagan National Airport for the latest on the recovery effort after the deadly aircraft collision. Tyler Kendall is standing by in Washington. Tyler, we now understand all 67 people on board obviously have lost their lives. The tragedy evolves. Where are we in this recovery mission on the ground?
Well, Manus, crews worked overnight on the search and recovery mission, as you mentioned, and as we've been reporting, there are no expected survivors. We know that 64 people were on that commercial flight. An additional 3 U.S. service members were on the U.S. Army Black Hawk helicopter. Now, the D.C. fire chief said that divers have reached all accessible areas. What that signals is that the search mission will move into its second phase. Today, we are expecting divers to start to remove pieces of the plane from the Potomac River in a bid to try to recover additional bodies. Now, I was at the NTSB briefing yesterday. That's the agency that is leading this investigation. They told us reporters that we can expect a preliminary report in the next 30 days, although we could get some information sooner than that, particularly as the NTSB confirms to Bloomberg News in a statement that they have recovered 2 data recorders from the commercial flight. That's going to be absolutely critical in their investigation because, Manus, there are still some big questions remaining this morning, particularly as Transportation Secretary Sean Duffy says that this tragedy could have been prevented.
And they did make it very, very clear that they had significant amounts of information during that press conference yesterday. It wasn't that they lacked information. They had substantial information. Now, if we pivot to the White House, we had the president blaming the FAA's diversity program for the tragic accident. Let's just take a listen.
FAA says people with severe disabilities are most underrepresented segment of the workforce, and they want them in, and they want them. They can be air traffic controllers. I don't think so. The initiative is part of the FAA's diversity and inclusion hiring plan. Think of that. The initiative is part of the FAA's diversity and inclusion hiring plan, which says diversity is integral to achieving FAA's mission of ensuring safe and efficient travel. I don't think so. I don't think so. I think it's just the opposite.
Don Tyler, that was the President of the United States of America. He was not the only one on that podium who made DEI references. The Vice President was on that podium. Pete Hegseth was on that podium. All of them leaning into DEI policies. The Democrats, blaming Biden, blaming Buttigieg. I mean, it was a roll call of blaming that was given out by the White House yesterday.
Right, and Manus, when pushed on it, President Trump did not provide any evidence, just said that it was under investigation. Important to note that many of the FAA's hiring practices have been on the books for close to a decade, which would encompass, of course, the first Trump administration, and this is the first deadly U.S. commercial air crash in about 15 years now. Former Transportation Secretary Pete Buttigieg did respond to these allegations, defended the Biden administration's response, and called President Trump's comments, quote, despicable. But this is proving to be an early test for this newly minted Trump administration cabinet. You had Defense Secretary Pete Hegseth coming out. He was confirmed last week. And then Transportation Secretary Sean Duffy confirmed only on Tuesday. Important from that press conference, though, President Trump did appoint an acting FAA administrator. At this point yesterday, there was nobody helming the agency as they started to get this investigation underway.
Okay, Tyler, thank you very much. That's Tyler Kendall there with the very latest. And we'll keep you updated throughout the day with the latest from Washington. A very good morning from New York and the Bloomberg Brief.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It is Bloomberg Brief. I'm Manus Crenny here in New York. A look ahead to the rest of the day. Big oil kicks off big earnings. Exxon and Chevron before the bell. In a few hours, Mexico's President Claudia Sheinbaum, she holds her daily news conference. Let's see what her response might be to the imminent 25% tariffs, plus U.S. PCE, along with personal income. They hit the tape at 8:30 a.m. Some individual names for you. Apple, it was on the call last night that the market became a little bit more convinced about the trajectory and the future, even though China and the iPhone sales were underwhelming. Forecast, after a mixed results, one could say. Vertex Pharmaceuticals jumps after the FDA approves its painkiller as a safer opioid alternative. And Walgreens steadily decline, down 10.3%. Cancelling that dividend, suspending the dividend, is a big shock to the market. Mike McKee is standing by. We've got a little bit more data to get through today, PCE and personal income. Mike, good to see you this morning. PCE, I like what Ellen Zentner had to say yesterday from Morgan Stanley. The consumer spending, it's unstoppable. But the question is, does that unstoppable spending morph itself into higher inflation?
Well, that's the question for the Fed, and that's why everybody's paying attention to this today. Although the PCE numbers are among the most anticipated, there's not going to be much surprise today because this is the third part of the fourth quarter. This is the December number. And since we got the fourth quarter numbers yesterday on a quarterly basis, economists have backed out what we're going to get. And Jay Powell announced it at his press conference, 2.8% year over year for the core and 2.6% for the headline. Now, the headline goes up a little bit because of energy prices, and this isn't going to show any progress. So people are going to still be concerned about the Fed and whether or not they're going to be lowering interest rates right now. There's no point because inflation is not moving toward their target.
This kind of reinforces the pause, though, doesn't it?
It does reinforce the pause. We get another number today that the Fed is going to be watching, the employment cost index. It's a quarterly figure, and what it's shown is that people are making more money. The rate of wages is going up faster than inflation. So that's why we're seeing so much additional consumer spending. People can afford it at this point. It's the business spending, which we don't get today, that's been an issue.
And in terms of the rest of the narrative here, you've got a debate in this market as to whether these tariffs, we don't know what they're going to be. We don't know whether they're going to be, it's going to be like a mini clash like we had with Colombia or something much more substantive. And this is the quantum of unknown policy that they're grappling with, isn't it?
It is, and there's really no way to forecast what the impacts are going to be because you have to know which countries are tariffed, how much they're tariffed, what they're tariffed on, and then what they're going to do in response. And we've heard from the Canadians, we've heard from the Mexicans that they're going to respond in kind if President Trump puts tariffs on. So it's going to take some math to try to figure out the impact of all this, and it also is going to depend on how long it lasts. So the Fed can't really make any decisions until they have a lot more information.
And he was very, very clear about sort of pushing back on any of the politics here. We're not here to sort of cheer or condemn anything that comes from the White House. The other thing that we've got to consider is, even though Ellen Zentner talks about the consumer being unstoppable, the savings rate is rolling down.
It's rolling down. The question is, does it continue to roll down? We have seen a lot of volatility in that. Some months it goes down, some months it goes up, and when it goes down, everybody says, well, we're spending our savings, and therefore Americans are going to stop spending soon. But then it goes up again, and we still seem to be spending. And as I said, the wages growing faster than inflation is really what's kind of helping drive this. People feel comfortable spending some savings or spending more of their paychecks because they know they've got a little bit more than inflation at this point.
Okay, well, you break the data during surveillance, so we'll see you a little bit later on. That is Mike McKee on the economic agenda. Let me just leave you with a snapshot of what's going on with the equity markets, because we've had the Bank of America flow show come through, and I think there's some interesting data in that. SPOs are up 0.4%. Look, technology's got a nice bounce in it as a result of the soothsayer coming through from Apple on the call last night. But this is the flow. Tech has actually had the biggest inflow in 3 months. And if you give, just think about this, just think about the near $600 billion wipeout that you had in NVIDIA at the start of the week. It's still down 12% on the 4 cash trading days. Financials, the biggest inflow since January 2022. But globally, stocks having this big inflow, the biggest inflow since 2018. So the question is whether the technical recalibration has finished on NVIDIA. S&P 500, as I say, into 0.4% higher. So you are just seeing this bond market count down. Bonds overall down 9 basis points in the past 5 days. One juncture we're down 12 basis points, jolted by DeepSeek. This morning we traded 453. Mike's just set the stage for the PCE and the PI, and the personal income also there. Consumer spending having the largest bump since 2023. So the markets are setting up. Oil is also very much in focus. We wait to understand if there is 25% tariffs on Mexico and on Canada. What are the ramifications for oil? Does oil get a carve out? We've given back just ever so slightly on the oil market this morning. You're importing nearly 4 million barrels a day from Canada, 500,000 barrels a day from south of the border. And the risk is this: if oil doesn't get a carve out, that runs against everything that was politically promised on the campaign trail by Donald Trump. That's it for the Bloomberg Brief. Team, I'll leave it with surveillance to take you through the next 3 hours of markets on Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter, because then I got left alone. And actually, I think out of that period, we started to create better art, because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality, because it was encouraged to be boutique. Now, ironically, This chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's not just the earnings calls of the Mag 7 this period that matter, it's the earnings calls of the other companies.
The expectation for 2025 and 2026 is that earnings growth rates are going to decelerate.
We're seeing a separation of the winners and losers. We're probably going to be choppy here for the next 3 to 6 months.
This is a good time to think about these other diversifying hedges.
I don't think what we saw on Monday with DeepSeek is that canary in the coal mine. I really don't think so.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, going into that weekend, equity futures advancing once again. On the S&P, up by 0.4. On the NASDAQ 100, up by 0.7. We've got one question this Friday morning. Is this market set to collide with President Donald Trump's self-imposed deadline?
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So will he or won't he slap 25% tariffs on Canada and Mexico? The Wall Street Journal reporting that President Trump's advisors are considering several off-ramps to avoid enacting the universal tariffs on Mexico and Canada that he pledged.
But he's certainly brandishing them, and the scope is there for him to do this tomorrow. It's a self-imposed deadline, even though the memorandum that he signed when he first came into office was to look at the trading partners by April 1st. He then threw out February 1st for Canada and Mexico. The North Star for this has to be fentanyl. Kevin Hassett was on Fox Business and talked about the fact that he's very serious about using whatever he can, economic might, to fight fentanyl. Jonathan, what strikes me about what he said yesterday, though, is I don't think the market is prepared if he goes as far as oil. And Trump said he can make that decision as of last night when it comes to Canadian imports of crude.
Let's stay on fentanyl. So Neil Dutta of Renmark wrote this piece just yesterday afternoon, and he said this: if there is a silver lining here, it's that Trump is mostly talking about fentanyl. Goes on to say that means there could be an off-ramp over the weekend. It wouldn't be the first time.
It could be an off-ramp. Also, Trump could come out, say that he has these tariffs in place, that they've been written up, hasn't yet signed them, to try to get maybe Canada and Mexico to the table, maybe some phone calls, maybe a trip like we saw Justin Trudeau take to Mar-a-Lago. But what I would also say is I was in D.C. for a few days. When I asked one of Trump's advisors, what does he most focus on around the world? I was keenly focused on, is it going to be China, Russia, the Middle East? And they said, are you kidding me? It's immigration and it's the border, and look at everything he's doing to make that point very clear.
Big one to watch going into the weekend. This is one to watch this morning. Apple in the pre-market, slightly firmer, coming out with numbers yesterday. The revenue for China, awful, down 11%. For the iPhone, not much better. No growth in the core hardware business. The outlook? Apparently the outlook was enough to cheer investors with the stock higher here, Anne-Marie, by a little more than 3%.
Enough to cheer them, but there's a ton of concerns when it comes to Apple, and you heard all of them on the call. Apple Intelligence in China, they're saying people are excited about Apple Intelligence, but if you're in China and you're buying that hardware, you don't have access to that Apple Intelligence. They're still trying to figure out how to get a local supplier, local services to help them with that. So Huawei is really leading the way. Then in the EU, They talked about this. Apple won't be offered, Apple AI, the intelligence, won't be offered to customers until April, and continued scrutiny they're facing in the European Union. And then, of course, domestically, what we're talking about this morning, tariffs. They have to plan for potential higher tariffs.
Tim Cook was asked about it on the call. Do you know what he said? We're monitoring the situation. I think we're all monitoring the situation. That stock is higher in the pre-market by a few percentage points. The broader equity market doing okay on the S&P, up by 0.4%. Coming up this hour, we'll catch up with Sebastian Page of T. Rowe Price on why he's a reluctant bull, Adam Posen of the Peterson Institute on Trump's tariff threats, and Pierre Ferragut of New Street on Apple's positive outlook. We begin this hour with stocks rising after results from Apple and Intel. Sebastian Page of T. Rowe Price saying he's a reluctant bull. We remain slightly overweight stocks versus bonds, and our position for the stock market to broaden. However, we're starting to take profit. Sebastian joins us now for more. Seb, it's good to see you.
Great to see you.
Where are you taking profits, sir?
We're selling some stocks. We're going to remain still overweight for now. We're putting the proceeds in cash, so we're underweight bonds. And we're also selling some high yield. We're splitting the proceeds between cash and bank loans, which I think are attractive when rates surprise on the upside a little bit. They're kind of negative duration, if you will.
So 2 points to make here. One, why you're selling, and the second, why you're allocating the proceeds the way you're allocating them. Let's start with the why you're selling. Why are you selling? Why are you coming out of stocks just a little bit and selling down high yield just a little bit?
Okay, I'm going to give you the most consensus narrative, the most boring narrative.
Go ahead.
Okay,
It's Friday.
Yeah, we're confident in the economy. The economy looks just fine, but we're worried about valuation. And I watch surveillance every day, and everyone's on that boat. But valuations are expensive. And, you know, at 22 forward earnings, price-earnings ratio on the S&P, it's high. In 2021, remember all the speculation we had? Does it start to feel a little bit like 2021? You know, in 21, someone bought a JPEG of a rock. Remember? 1.3 million. And when I say that to clients, they always reply that someone just bought a banana taped to a wall for 6 million. So they're starting to feel expensive.
What are you pointing to that's frothy, though? That's what I want to get into. Where do you see the froth right now?
Overall stock valuations? Overall. And I say overall because there's some stocks that are quite fairly priced in the world. So we're positioned for the market to broaden. But also credit spreads. Credit spreads really tight by historical standards.
What's fairly priced right now?
I think, look, if you look at the average stock in the world, you get a price-earnings ratio of 14. That's actually the long-run average for the average stock in the world. So that means that you have smaller caps, value, international small caps, EM, pretty much everything, but the technology sector, and there are parts of the technology sector that are also fairly valued. But it's all about the broadening. I think we're approaching peak concentration.
People have been saying this for months.
Yes.
Actually, they've been saying it for an entire year. John started off the conversation saying you're a reluctant bull. So is that what makes you reluctant? Just the valuations? Or are there other things you're concerned about, like policy uncertainty?
So I guess Lisa's not here today, so I need to play the bear narrative.
You've got to give us the doom and gloom, yeah.
Okay, look, I think long-end rates are a real risk for those valuations. The curve is flat, you have tariffs, you have inflation, you have resetting higher on growth expectations. The direction of long-end rates could be higher, and that could put pressure on those valuations. And then you have the usual list, tariff. Geopolitics, often they don't matter until they really do. And Anne-Marie, my view is that geopolitics will really matter when you see an oil shock. And given the pressure that this new administration is going to put on Iran and where Iran is right now, I don't know where it's going to come from. I'm not a geopolitical analyst, but that's one of the risks that's out there.
Well, you've got to allocate capital, and that was the second point you made. As you sell down some of those equity positions into high yield, you're going into cash and not into the long end of the bond market, not into treasuries, not into a 10-year at 4.53. Do bonds not do what bonds used to do in the portfolio from your perspective?
Look, we still hold bonds. We have an overweight. We're short duration. Bonds will do what they need to do only if we get a growth shock. And by the way, I didn't name it as a risk. It's still a risk that some growth-related data disappoints. Remember back in August last year, we had one bad non-farm payroll print, and the market kind of freaked out a little bit?
So did the Fed.
It doesn't take much for a growth scare. I don't think that's the base case. In that case, bonds will diversify your portfolio. Rate shock, inflation shock, bonds will not diversify.
You saw how the Fed responded to that unemployment head fake from the summer. They wanted to insulate the labour market. They cut interest rates 100 basis points. That was the starting gun for then. Things have changed a few months later. And I wonder from your perspective whether the threat of tariffs constrains the dovish bias of the Federal Reserve. Do you think it does?
Yes. I think it does because, at least in the short run, it's inflationary. We're talking about 25% on Canada. You get a ton of crude imports from Canada. I don't know how oil prices aren't reacting a bit more this morning, right? This is like 20% of oil consumption in the U.S. is derived from Canadian crude. So, yeah, I mean, that ends up being inflationary.
And when it comes to states landlocked in the Midwest, it's their only area where they actually get crude is from Canada. When you just mentioned earlier, we're never ready for a geopolitical shock, and it kind of shocks everyone when we get it. And you think that could be in the oil space. Could that be this weekend? Could it be Canada? Not something like Iran or Venezuela or Russia?
Well, the market doesn't seem to freak out about it yet, right? And a part of this is we don't really know what's going to happen to tariff ever. I mean, it could change on a dime, but I think once they're on, then it's harder to take them off. So I don't know. Anne-Marie, I think it's a small probability of a fairly sizable oil spike. When I asked a geopolitical expert recently, and I said, what could be the black swan in geopolitics in the oil market? And he said, well, once you start hearing that word in the news media, once you start hearing it on surveillance, Hormuz, which we haven't had any disruption there, but that is a large proportion of global oil flows. I'm kind of just, you don't know, it's a black swan.
Right. At the moment, Trump has been actually quite quiet about Iran and focused on other issues. You did mention something, though. Once you put tariffs on, they don't come off. And we saw that in the Biden administration. They kept Trump's first administration tariffs on, yet it added a little bit to inflation, but not enough. When we had an inflation spike under Biden, they didn't even remove them. So why is the Fed putting all this emphasis, potentially, in their concerns about policy going forward, what that does to inflation, on tariffs, if we've had them for years now?
Well, I think we're putting that emphasis. I don't think the Fed is coming out and saying we're watching the tariff game and we're adjusting our policy accordingly. We're reading.
Well, they did, though. They didn't assume, and then they did assume.
Right.
Part of that is because of trade realignment, right?
Yes. I mean, look, they have to react. They're data dependent, and I think right now the Fed is wait and see. So you're right. The first round of tariffs weren't inflationary. I think there are all sorts of effects of tariffs that we don't understand. You see what happened with Colombia, right? It's a negotiation.
It's not straightforward.
tool.
I'm with you. I hear that all the time. But to Anne-Marie's point, the accusation leveled at the Fed right now is they seem to be more concerned with Trump tariffs than they were with Biden fiscal stimulus. And it's hard to get your head around that. Do you speak about that on the committee at all? What explains that?
I mean, we speak about all of it, and we debate all of it. Look, the Fed is looking at, or talking about looking at employment and inflation, and tariffs are a driver of inflation in the short run, could be a driver of inflation in the short run. I think it all boils down to this data dependency of the Fed. And if, to the extent that tariffs drive the data itself, then the Fed will adjust, right? So there's several layers of reactions in macroeconomics that the Fed will react to. But you know, it's a treacherous environment, I think, for them it might not take much for the talk of rate hikes to start again.
Sebastian, we'll leave it there. That's the big question for 2025. In just a moment, we'll catch up with Adam Poston of the Peterson Institute, who made that point, not in the last few months, but way back in the summer. Sebastian Page at T. Rowe Price there. Seb, thank you, sir. Appreciate it. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Good morning, John. U.S. investigators have found the black box flight recorders from the American Airlines jet that crashed in Washington after a midair collision with a U.S. Army Black Hawk helicopter. The NTSB is leading the investigation and expects to produce a preliminary report within 30 days. A final report could take up to 24 months. Meanwhile, take a look at Apple shares. They're rising 3.4% in the pre-market after the iPhone maker gave a reassuring revenue forecast for the current quarter. But the results for the crucial holiday period were mixed. Total revenue in the fiscal first quarter rose 4%, but sales in China remain a sore spot, falling 11% in the quarter. And the Chinese AI startup DeepSeek is under investigation for allegedly using NVIDIA chips that aren't allowed to be shipped to China. Sources say U.S. officials are looking at whether the advanced chips were acquired through third parties in Singapore. This comes after the Biden administration cut off China's access to NVIDIA's most powerful chips. That's your Bloomberg Brief. John?
Yeah, Hira, thank you. Remember the story at the start of the week? $5 million, export compliant. By the end of the week, a few days later, I don't know about that.
And I think when we heard that, everyone around this table was throwing criticism of that and questioning it. Not only that, but congressional offices, Jonathan, now are being warned not to use DeepSeek. Lots of concerns.
Some big concerns. Friday morning price action, very, very different to Monday morning price action. We are positive here by 0.4% on the S&P. Up next, the tariff showdown begins.
I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. Those tariffs may or may not rise with time.
A conversation up next, live from New York City this morning. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Four sessions down and we're poised for a week of losses on the S&P 500. We're down by about 0.5%. One more session to go. Equity futures positive here by 0.4%. In the bond market, yields higher by a single basis point. Under surveillance this morning, going into the weekend, the tariff showdown begins.
We'll be announcing the tariffs on Canada and Mexico for a number of reasons. The people that have poured into our country, the drugs, fentanyl, and everything else, the massive subsidies that we're giving to Canada and to Mexico in the form of deficits. And I'll be putting the tariff of 25% on Canada and separately 25% on Mexico. And we will really have to do that because we have very big deficits with those countries. Those tariffs may or may not rise with time.
So here's the latest. President Trump set to hit Canada and Mexico with 25% tariffs on imports go into effect tomorrow. Both countries vowing to respond with tariffs against the United States. Joining us now to discuss is Adam Poston, the president of the Peterson Institute for International Economics. Adam, good morning. It's good to see you.
Good to see you, John.
There is a constructive view out there, and it sounds like this. This is what I hear a lot from equity bulls. They say the approach to tariffs is transactional in nature. There's scope for significant negotiation, and the backdrop right now for the broader economy is pretty decent. Things are going to be okay. Is there a price we have to pay for the uncertainty in the meantime?
Yes. The price we're going to see not just in equity markets, but we're going to see in specific industries. We're going to see in
energy prices going up. We're going to see in disruption to the U.S. auto sector. We're going to see in sharp retaliation from Mexico and Canada on specific industries. I don't mean to be vague by saying specific industries, but the point is it's about choke points. It's about things that are hard to replace. And the big thing, as studies we've done at Peterson Institute say, and which is intuitive, is there's some range over which you put on a tariff and everybody's like, okay, it's a price rise, it's annoying, we'll deal with it. There's another range where it's like you're imposing shortages like you did during COVID, that suddenly it becomes unaffordable or inaccessible to get certain things you need. And that's when you start getting big macro effects. So I agree, John, with the people who say the underlying strength of the U.S. economy is there. But this is, frankly, nuts. Canada and Mexico are our two largest trading partners. We're at peace with them. They're military allies. They're democracies. And our auto sector and our food sector are incredibly integrated. So this is going to hurt.
But Trump hates trade deficits, so he will do anything he can to try to bring that deficit down or maybe bring up negotiations for USMCA. What do you think is the underlying drive for these types of tariffs that, based on my conversations, I'd be more shocked if we don't see them happen tomorrow? Is it a negotiation tool, or he wants to keep them on?
Emery, I think you're reporting your sense is right. We've been talking for months about expecting that the tariffs would really happen. I think it's much more likely the negotiations in the end go well with Canada than with Mexico. But the thing is, 25%, even if you exempt certain things, is an enormous number. This is, when people say, oh, the tariffs under Trump 1 were not inflationary, those were a couple percent in a few industries. This is very wide tariffs at a very high level with major retaliation.
So let's talk about the scope. Do you think oil is really on the table? Trump kind of flirted with it yesterday in the Oval Office.
We don't know. It doesn't make any sense to put oil on the table because then you're saying, okay, I want to buy more from Saudi or Russia. I just want to go back to your last point, which is right, which is how much is it negotiating versus keeping it on. The fear is, and I think what the market should fear, is that they're going to put on this across-the-board minimum of tariffs as part of the tax package. And then we're in an entirely different world.
Because it's a revenue raiser.
It's a revenue raiser. On net, it's probably bad for growth. And on net, it's not going to raise enough revenue. But that would be the justification.
Can you go through what you would expect in your base case as retaliatory? Because Trump is talking about potentially tariffs on Canadian crude. But for Canada, that would be the nuclear option for an export tariff.
Right. I mean, it's like when they complain, that, oh my God, China's going to cut us off from something. So imagine if Canada cut us off from oil. Think about, in the 1973 oil crisis when the Arab petrostates decided to cut the U.S. off oil. How is that good for the U.S.? I mean, it's destructive.
So, Adam, the Federal Reserve has got to prepare for all eventualities. You warned back in August they should prepare for that. We talked about this repeatedly. 6 months later, whatever it is, are you more comfortable with where the Fed is now compared to where they were going into the end of the year?
I'm more comfortable, but I'm not yet comfortable. I mean, the Fed has the luxury because, the fundamentals of the U.S. economy are quite good. And we've been getting good news on productivity, as we've also talked about. So the Fed has something of the luxury that it's not a crisis. They don't have to make up their minds now. But they keep having this inertia of saying, well, we're maybe not going to cut as much, but we're still going to cut. Now, on the fundamentals of the U.S. economy, the idea that they need to keep cutting was already, I think, arguably a mistake. So then comes this issue of tariffs. Do they play Hamlet and agonize, oh, is it a first-round one-off effect, and we got to wait to see whether it goes beyond oil or beyond autos? Or do they say, hey, in a world we're close to full employment, there's pricing power, we're creating shortages.
Do you think there is pricing power? You don't think that corporations will have to just stomach this and hit margins?
I don't think so. I mean, the evidence is not the so-called greedflation, that was always a myth, but the evidence is not every industry, but most industries, the companies do have pricing power. I mean, when the economy's growing well over 2%, people are buying. When we had an inventory correction, otherwise, as Jason Furman's pointed out, the underlying strength of the U.S. economy is even stronger than the 2.3 number we had. the idea that there's no pricing power is just strange.
I think this conversation is important because it's difficult to sit here and say, I think the president will do X or Y this weekend. We've got to think about how inflation-prone this economy might be. When you think about sources of inflation at the moment, whether it be energy, labor, goods, or services, what is it about the current state of things that you think this economy is more inflation-prone than maybe the Federal Reserve themselves might believe?
I think there's two categories, Jonathan. There's the pre-existing underlying economics, and then there's the Trump tariffs and other effects. On the pre-existing, the economy is inflation-prone because financial conditions are not tight. They're just slightly tight in residential real estate and otherwise not. I think we're inflation-prone because for all the talk about energy deregulation, we've seen how that's actually not a major determinant of inflation, right? Energy prices came down enormously in the last year of the Biden administration, and that wasn't enough to make up inflation. And we're inflation prone because the Fed hasn't lost huge amounts of credibility, but we're not down to target, and it is a few years later, and the memory of inflation is very strong. That's the fundamentals. Then on Trump, we've just talked about tariffs. Again, in theory, you could have a tariff that's just a price shift, like anything that's not Canadian and Mexican becomes relatively cheaper. But in practice, it's going to be experienced as inflation, and then people will want to catch up with prices and wages. But also, the anti-migration stuff, leave aside the human rights, the anti-migration stuff is partly recessionary, partly inflationary, because it creates shortages of labor in certain industries like home health care, residential construction, food harvesting, that native workers, documented workers don't want to do. And then you've got potentially, and this is going to be a lag, this is a few months down the road, very large tax cuts. And even if as Anne-Marie rightly says, you get some revenue from the tariffs, it's nothing to compare to the size of the tax cuts. So if you're the Fed and you're not just supposed to be reacting data dependent, but you're actually supposed to be looking at the forecast, it's very hard for me to understand why they're not pivoting more.
Just quickly, your base case is the next move's a hike and not a cut?
My base case remains that by September they'll be hiking. They may make a further mistake and cut once more. I hope not, but my base case is by September they'll hike.
It's quite a call, but you've been making it for quite a while. I appreciate it, Adam. Thank you, sir.
Thank you.
I imagine it's not the call you wanted to make either. Adam Poston there of the Peterson Institute. Coming up next on the programme, we'll catch up with the former acting FAA administrator, Billy Nolan, as investigators look for the clues in the fatal crash at Reagan National Airport. Live from New York City with equity futures positive by 0.5% on the S&P 500. This is Bloomberg Surveillance.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but you can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I think we're ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Equity futures right now positive by 0.5%. We're up on the Nasdaq 100 by 0.8. Tons of tech earnings through the week so far. Meta was decent. The outlook for Tesla, the storytelling, powerful. Microsoft pretty mixed. As for Apple, the bar's pretty low for Apple right now. The numbers weren't great. They weren't great at all. And to be honest, neither was the outlook, but it was sufficient enough to cheer up Apple investors with that stock positive in the pre-market and giving the Nasdaq a lift as well. In the bond market, 2-year, 10-year, 30-year yields shaping up as follows. Your 2-year 420, 54, just about unchanged. In and around 450 all week on a 10-year. Absent that big move lower in yields on Monday, yields were back to about 452.66 right now. And I just want to finish on foreign exchange. Two currency pairs to watch going into the weekend. There's nothing else. Dollar MEX, dollar CAD. Dollar MEX yesterday had a 1 percentage point move with the threat of tariffs driving foreign exchange. Under surveillance this morning, President Trump expected to announce 25% tariffs on Canada and Mexico tomorrow, citing fentanyl and trade deficits.